thank everybody who contributed to the GoFundMe page for my buddy Frank, who's up in the hospital right now, suffering from an acute pancreatitis. Quite a few people had donated to the GoFundMe, so I really appreciate you guys doing that. In today's video, I am going to talk about the 4 speeches that I think are very important to understand for monetary policy. Like, if you really take into, like, if you internalize these 4 particular speeches, actually it's just 3 of them. One of them is just more of a confirmation kind of speech, but I thought it was pretty good. But if you take these 4 speeches in, you're really going to understand monetary policy, or at least the intent coming from the Federal Reserve when it comes to their monetary policy, because this strategy is dating back well over 20 years now. And if you really understand it for what it is, like, you know, understand why it is that they conduct themselves the way they do, then it makes it a lot easier to understand where it is that they're going to be going into the future. You know, right now there is so much confusion on what it is that the Federal Reserve intends on doing with their interest rates, you know, as far as, like, are they going to drop 3 points, 1 point, no points, go up a point, who knows, right? And if you listen to the Federal Reserve statements themselves, they are incredibly confusing, and that's the part of the monetary policy, is to make sure that they have that confusion out there, that people are not exactly sure of what it is that's going to take place, and that allows the Federal Reserve to continue to conduct themselves the way they do. So now I'm just going to do a very, very brief review of these speeches, but I left a link down in the description for you so you can go and read them for yourself at your leisure. Now, it's very important to read these things and to really internalize it. To, like, if you read over something and you don't quite understand it, then you have to research what it is that they are talking about. They talk in a code that is really unique to, like, they call it Fed speak. So you really almost have to learn how to speak like the Federal Reserve itself. In some of their language, the lingo, the way they phrase things, it can be very confusing. And so sometimes, like when I was first learning about monetary policy and studying these speeches, I would sometimes have to read a speech over and over again for a week or more to really, like, understand what it was that they were trying to say in it. Now, the first one, this is coming from Ben Bernanke, and this is the oldest one. This is November 21st, 2002. And the title of this is Deflation, Making Sure It Doesn't Happen Here. Very, very good speech. Now, Ben Bernanke talks about the credible threat theory. Now, this is jawboning, right? This is what a lot of people, or forward guidance. However, it's not necessarily straight up forward guidance that is always being used within this monetary policy. The credible threat of the Federal Reserve raising or lowering rates right now is the monetary policy. We have to understand this. This is not a forward guidance. Forward guidance is when they come out with a statement, we are going to do this, not like these dot plot projections and stuff like that. However, the part of this speech that I find most relevant is the part where they talk about how to cure deflation, right? And let me see if I can bring it up here. Curing deflation, in the tools that they go to talk about, are everything that the Federal Reserve is using, like, essentially right now. One of the things that they talk about in that speech is something that I never really thought about before, was the purchasing of foreign assets, like the debt of a foreign nation. So one of the things, let me see if I can find it here, that we have to remember is that the Federal Reserve would typically want to lower interest rates in order to stimulate the economy by dropping the Fed funds rate, which would essentially be the overnight lending rate at these big banks. Now, dropping the Fed funds rate has been the traditional tool for pretty much everybody who's alive, right? If you go back all the way to the early 80s when they raised interest rates up to 15, 20, whatever it was, I can't remember exact number what it was, but it got somewhere between 15 and 20%. The lowering of interest rates from that point on has always been the tool from the Federal Reserve. That was their monetary policy, was either the raising or lowering of interest rates. However, the Federal Reserve ran into a situation in which that they would run into something called the lower bound of zero, right? And they knew that back in 2000. Now, let me see if I can find the spot here. Okay, however, a deflationary recession may be different, or maybe may differ. Where are my glasses? Here we go. May differ in one respect from normal recessions, in which that the inflation rate is at least modestly positive. Deflation of sufficient magnitude may result in nominal interest rates declining to zero or very close to zero. All right. So this is when he's talking. Remember, this is long before it happened. He's talking about the future. Once the nominal interest rate is at zero, no further downward adjustment in rates can occur, since lenders generally will not accept a negative nominal interest rate when it is possible instead to hold cash. At this point, nominal interest rates is said to have hit the zero bound. So now this was the major concern coming from the Federal Reserve, was running into that lower bound and no longer have any room for stimulating the economy. Now he goes in to curing deflation, right? And now in this part, I'm going to read the credible threat, how the credible threat is like used, right? Okay, so as I have mentioned, some observers have concluded that when the central bank policy rates have falls to zero, its practical minimum, monetary policy loses its ability to further stimulate aggregate demand in the economy. See, that's it. They dropped it down to zero. No longer can they get people to go out there and borrow money to buy houses and cars and go on vacation, right? It screws with the aggregate demand. At a broad conceptual level, and in my view, in practice as well, this conclusion is clearly mistaken. Indeed, under a fiat, that is paper money system, a government, in practice with the central bank in cooperation with other agencies, should always be able to generate increased nominal spending and inflation, even when the short-term nominal interest rate is at zero. The conclusion that deflation is always reversible under a fiat money system follows from the basic economic reasoning. A little parable may prove useful. Today, now that you remember this is a long time ago, this is back in 2002. Today, an ounce of gold sells for $300, more or less. Now suppose that a modern alchemist solves his subject's oldest problem by finding a way to produce unlimited amounts of new gold at essentially no cost. Moreover, his invention is widely publicized and scientifically verified, and he announces his intention to begin massive production of gold within days. What would happen to the price of gold? Presumably, the potentially unlimited supply of cheap gold would cause the market price of gold to plummet. Indeed, if the market for gold is any degree efficient, the price of gold would collapse immediately after the announcement of the invention, before the alchemist had produced or marketed a single ounce of the yellow metal. You see that just the threat of it would do it. What has this got to do with monetary policy? Like gold, U.S. dollars have a value only to the extent that they are strictly limited in supply. But the U.S. government has a technology called a printing press, or today, its electronic equivalent, that allows it to produce as many U.S. dollars as it wishes at essentially no cost. By increasing the number of dollars in circulation, or even by the credible threatening to do so, the U.S. government can reduce, I got to get the page down here, can reduce the value of dollar in terms of goods and services, which is equivalent to raising prices in dollars of those goods and services. We conclude that under a paper money system, a determined government can always generate higher spending and hence positive inflation. Now, this is the credible threat theory in its finest descriptions, right? And if we go to another speech, now I'm just going to leave it at that. This speech is really good, so I'm not going to try and take too much time on it. But that's kind of like the key point that I wanted to take out of it. If you continue reading, he goes into talking about asset purchases, like the going into like the quantitative easings and stuff like that, and then eventually actually talks about the purchasing of foreign debt, which I haven't seen the Federal Reserve doing. in a significant manner. Like if you go into quantitative easing, but instead of buying U.S. treasuries, they're going into quantitative easing and buying the debt of a foreign nation. And so, sorry, I walked out here in the rain and my computer is just covered in water. So, all right. So the other speech, let me see if I can find it here real quick, is, and this one's kind of a backup to the credible threat theory. This is actually coming from Clarida, who I don't think is actually at the Federal Reserve any longer. I think he retired. But this one was given May 21st, 2020, and it's the U.S. Economy Outlook and Monetary Policy. Now, this speech is, it's okay, but there's one part in there that I really thought kind of backs up the theory of the credible threat, like the credible threat theory. This really is talking about the use, or how well that is used. Should I say it like that? Yeah, how well this credible threat is used. Now, in here, he is talking about the establishment of the special purpose vehicles and how well those programs worked. So now I'm going to kind of briefly talk about this, and then I'm going to go into the key point about it. But it says right here, since March 17th, the Federal Reserve Board has announced the establishment of no fewer than 9 facilities to support the flow of credit to households and businesses. These programs are authorized under emergency lending powers granted to the Federal Reserve under Section 13.3 of the Federal Reserve Act and are available only in, quote, unusual and exigent circumstances. And with the consent of the Secretary of Treasury. I think you will agree that today we face circumstances that are both exigent and unusual. These facilities are supported with money invested by the Department of Treasury, drawing and appropriations of more than $450 billion authorized by the Congress in the CARES Act, Coronavirus Aid Relief Economic Security Act. This specific purpose of investing in Fed programs is to sustain the flow of credit to households, firms, and communities during the coronavirus pandemic. All right, so this is the bailout, right? This is when the Federal Reserve was setting up all these like lending facilities to backstop every corner of the financial market. Now, this is where it gets pretty interesting, because with these facilities, I screwed that up. Okay, with these facilities, we are providing a bridge by stepping in and supporting lending throughout the economy and until the recovery takes hold. Here we go. Credible threat theory. These programs are designed to offer a backstop source of funding to private sectors, and just the announcement that these backstop facilities would soon be launched appears to have bolstered confidence in the capital markets, allowing many companies to finance themselves privately even before the facilities were up and running. Bang, right there, the credible threat. Just them making this announcement that they were going to go in there and start buying up this corporate debt, got the markets to go out there and start front running the Federal Reserve. The Fed didn't have to do anything at all, right? They were able to finance themselves privately even before the facilities were up and running. Just the idea of them doing it was enough. All right, I mean, I love those speeches. Okay. Moving on. So that's like, when we think about it, Ben Bernanke's speech, right, has like the idea that they were going to run into the lower bound of zero, right? They were going to effectively run out of monetary policy. Now, we're going to move on to my favorite speech in the entire world, because I talk about it every single time I come out here, and that is monetary policy for a low neutral interest rate world. Let me see if I can find it. Here we go. Monetary policy for a low neutral interest rate world. This is really the second speech. That's the one that I was just talking about from Clarida. That's kind of like in conjunction with Ben Bernanke's speech, just to kind of prove the credible threat theory and how they use it today, like with those special purpose vehicles. This speech right here is so telling. In fact, do I have it in here somewhere? Yeah, bang. So this is the speech, and I'm just gonna, because this is easier to read from it. And again, like I don't know how many times I've said this. This is really it in a nutshell, right? Today, we face an altogether different set of problems stemming from a very low neutral interest rate. Now, this is important to remember because the neutral interest rate is the rate that is neither accommodating nor restricting the economy. It's when the Federal Reserve is neutral, right? And this, he goes on to talk about it, right? From a very low neutral interest rate. That is a short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. And now this is very difficult for a lot of people to try and wrap their heads around because they feel that the Federal Reserve had lost control, but they really didn't. Now, he goes on to talk about the neutral interest rate. Hey, thank you very much, Maxim. Maxim. I'm going to be right back with that super chat. I really appreciate the contribution and the support. Today's low neutral interest rate reflect the culmination of trends extending back 25 years. A quarter century ago, a typical estimate of the neutral interest rate in the United States was 2 to 2.5%, consistent with historical averages. Over the preceding half century since then, however, there has been a clear downward trend in the neutral interest rate in the United States and other advanced economies, with current estimates ranging from 0 to 1.5%. Now, this is very interesting to think about because nobody knows exactly where the neutral interest rate is. The neutral interest rate could be at 0, it could be at 1.5%, it could be at 3.5%. Nobody knows exactly where this neutral interest rate is. Now, by a lot of economists' estimates and guessing, and through the Federal Reserve, they have like this idea of using something called R star. The idea that the interest rates are still incredibly, or the neutral interest rate is still incredibly low, is the problem for the Federal Reserve, in that the idea that in future inflation expectation was persistently too low, which kept the neutral interest rate low. This is important to understand because with the low future inflation expectation being low, that pushes down on the neutral interest rate, which means that the Federal Reserve would not be able to drop the Fed funds rate far enough below the neutral interest rate before hitting the lower bound of 0. They were stuck. There was no room for monetary policy. They refer to it as scope, right? Like a lot of times inside of their speeches and stuff like that, when you read through it, that's what they refer to it as, is scope. Now, in this speech, he goes on to talk about, let me see if I can find it here. He talks about the three main trends that contribute to the bulk of this neutral interest rate, or the decline of the neutral interest rate. Talking about a population that is aging, productivity growth that is slowing. But the third, and this one's really interesting because you're gonna want to look for this one, right? Because it's happening right now. The problem with the neutral interest rate, right? One of the trends that what as you put it, the three main global trends appear for the bulk of the decline of the neutral interest rate over the past century. The third one is the heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities or central bank reserves and the yield on riskier assets such as corporate bonds. Now, that's important to understand because ultimately what he is talking about is that the treasuries, the debt of the U.S. government, right, the bonds, the U.S. bonds, the yield on those and the yield on corporate debt had this huge gap between it. Now, for me, when I think about this, and the easiest way to understand how this is a problem for the Federal Reserve is that if you want to try and stimulate the economy with the lowering of interest rates, and your asset that you purchase is the U.S. Treasuries, and you have this wide gap between the U.S. Treasuries and the corporations, which is where you're trying to get funding to, because once you can stimulate the corporations, that's where the, investments into new equipment, people, employment, all that other stuff starts to take place. But if there is a wide gap between it and you're going to buy you're doing asset purchases to try and bring interest rates down, but how far can you actually bring the corporate debt down if you have this huge gap between it, right? Does that kind of make sense? So this is a major problem for the Federal Reserve. They wanted to shrink this gap between the two of them. Now, I find it really interesting. If you go, I had a link to this article too that was actually talking about this exact thing, in that that gap, that spread between the two is like coming down in a dramatic fashion. Like they are getting that back, right? So that's also important to remember for future stimulating of the economy, is that if they can keep that wedge or get that wedge even closer together when they go to do the asset purchases of the treasuries and they drop those treasury price or drop the yields on the treasuries and the price go up, the investors will seek out yield and they'll move into the corporate debt, which will then begin the funding over to those corporations. This is really important to understand. It's hard to wrap your head around that and how it is that that operates, but that's really what a critical point of the Federal Reserve issues was that wider wedge and not being able to funnel the money into those corporations through the lowering of interest rates. What else was in this speech that I thought was important? Oh, that's right. Talking about the average inflation. So here's the problem that they were facing, right? The downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, a downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. Even in times when policy is not constrained, the expectation of below target inflation in the future affects current decision, putting additional downward pressure on inflation. In other words, monetary policy is always swimming upstream, fighting a current of too low of inflation expectation that interferes with achieving the target inflation rate. They needed people to have a higher inflation expectation in order for them to achieve their target inflation rate. They were not able to do it. Like quantitative easing 1, 2, 3, and 4 failed to produce the inflation scenario that the Fed was looking for. And so this was a major problem for them, is that they needed higher inflation rate. So now they go through like some of the ways that they can deal with the inflation or the lack of, right? The second option, right? He goes, well, let me just read them all, right? The number of alternative monetary policy frameworks have been proposed that aim to tackle the problems associated with the lower bound and on interest rates, right? So now they're at the lower bound. They have no more monetary policy. They can't stimulate it anymore. Although they differ in many ways, it is useful to divide these proposals into three broad categories. First option is to maintain the basic framework of inflation targeting and rely on a combination of aggressive conventional and unconventional policy actions when facing economic downturns to limit the deleterious effects of the lower bound. This carries with it the risk that inflation expectations become anchored at too low a level. So what he is basically saying is the first option is to try and remember, this is 2018. They have already done a quantitative easing 1, 2, 3, and 4 and failed to achieve the 2% inflation target that they were looking for. And what he is saying right there is that the first option is basically that, right, is to go with the quantitative easing and knowing that it's probably not going to work because it didn't work the first time, right? So this, because he says it right there, this carries with it the risk that inflation expectations become anchored at too low a level. You go into quantitative easing again, and people fail to believe that the inflation scenario is going to work. Because, like, you think about it, quantitative easing 1, 2, 3, and 4 produce some major hyperinflation thoughts. Like, I know I was one of them. Like, I dumped every penny I had into silver thinking that we were going to have a failing dollar any minute. And that wasn't the outcome, right? And what he is saying is, like, we try that again and it won't work. Second option, the average inflation targeting. Bang, right? Where the central bank purposefully aims to achieve an above target inflation rate in good times when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times so that the long run average inflation rate and inflation expectations are in line with the target. Okay, that is what we are now in. And so if you think about that option right there, the second option to this, the average inflation targeting, we now move in to not Ben, but Powell's speech, Jerome Powell, who, let me see if I can find that one here real quick. I'm sorry, guys. All right. Powell's speech right here. Now, Powell's speech, which was given, let me get up to the top here. August 27th, 2020. Title of this one, New Economic Challenges in the Fed's Monetary Policy Review. All right, now I'm not going to read the whole speech, but I'm going to come down here to the very end because it's probably one of the most important parts of the entire speech is when he actually gets into talking about the average inflation. Okay, so I'm going to read this ahead. I'm going to read a little bit of this and then get on to the important parts of it. But this is what it comes down to. We have also made important changes with regard to the price stability side of our mandate. Our long-run goal continues to be an inflation rate of 2%. The long-run goal is that. Our statement emphasizes that our actions to achieve both sides of the dual mandate will be most effective if the long-term inflation expectations remain well anchored at 2%. That's the long-term inflation expectations. Okay, not their current target, their long-term inflation expectations well anchored at 2%. However, if inflation runs below 2% following economic downturns, but never moves above 2% even when the economy is strong, then over time inflation will average less than 2%. Think about quantitative easing 1, 2, 3, and 4 failing to achieve the 2% target. That's exactly what he is talking about. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. The longer this continues, the longer that, or the harder it's going to be for them to get their 2% inflation target, right? Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down, right? Remember, right? This was the problem that they faced today, was the inflation expectation was persistently too low rather than too high. This is 2018. This is going into 2020. It's still the problem, right? To prevent this outcome, right? How do we prevent this outcome from taking place? To prevent this outcome and the adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Who talked about that before? Averaging 2%, the second option here, averaging the average inflation targeting, whereby the central bank purposely aims to achieve above target inflation rate in good times. That's coming from John Williams. What does Powell say? In seeking to achieve inflation averages 2% over time, we are not tying ourselves to, I'm sorry. I was going into the wrong one. I'm sorry. Therefore, following periods of inflation where inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are thus not tying ourselves. We are not tying ourselves to a particular mathematical formula that defines the average. Thus, our approach could be viewed as flexible form of average inflation targeting. Our decision about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. Of course, if excessive inflationary pressures were to build or inflation expectation were to ratchet above levels consistent with our goals, we would not hesitate to act. All right. Those 4 speeches, if you can really internalize everything that was being said inside of those 4 speeches, you will really get to understand where it is that the Federal Reserve is trying to go with their monetary policy right now. It is not a 2% target. There is no doubt in my mind at all, right, that the Federal Reserve has zero intent on trying to achieve a 2% target. They have tried that for decades and it failed. They cannot do it. There's no way that the Federal Reserve is going to have any kind of monetary policy where they can consistently have a 2% target. It just doesn't work that way. They know it. It fails. They end up being under the 2% target, which means that they are now going for an average inflation rate over time, which during good times, they're going to let inflation run extra hot, extra long for an extended period of time. And this is exactly what is taking place right now. For any idea outside of that this was intended from 20 years ago is inaccurate, in my opinion, right? The Fed is not reactionary to the coronavirus. This is something that they talked about long ahead of time, and that they knew it, like whether or not the coronavirus was the one that took place, this was going to be the monetary reaction, whether coronavirus was there or not. Now, coronavirus gave them a perfect excuse to have the unusual and exigent circumstances to deploy the special purpose vehicles. Yeah, but who knows? Like, it could have been a war, it could have been, greater financial crisis, whatever that was going to happen. The Federal Reserve had a plan in place, and it's decades old. And this is part of it. Like, if you in there's more speeches. Like, these aren't the four most critical in speeches coming from the Federal Reserve. These are four that I have keyed in on. There's a lot of speeches out there that talk about a lot of different aspects of the economy, but these four, when it comes to monetary policy, understanding the lower bound of zero, understanding the neutral interest rate was too low, and knowing that the Federal Reserve was running out of monetary policy and that they had figured that out way before it actually had taken place, and that they knew that they had to have a game plan in place to deal with that issue. To think that they're being reactionary right now to any kind of political movement or whatever it is that people is just simply not right. It's just not right at all. These speeches right here prove it. They prove it to me. And this is one of the reasons why I was able to call things out the way I did when everybody was saying something different. Especially when it came to lumber. I mean, I could just, once I had internalized all this stuff and knew the things that I understood about the lumber industry, it was pretty easy for me, actually. All right, do me a favor right now, guys. Dishes Every Day, who has just commented, hit the like button, is literally 3 subscribers away from hitting the 500 subscriber mark, which is the first step in monetizing the channel. So go over and just give her a quick subscription, and she can move on with the monetization process of her channel. Thank you so much for joining in. We got 296 people. Do me a favor on another one. Go hit the like button and hit the thumbs up. YouTube algorithm will pick up the video, spread it around for more people to join in. I think this is incredibly good information. These 4 speeches, I mean, I just don't know if I don't know if anybody has actually combined this kind of idea together into what I have. Like, to me, this is literally cracking the code on the Federal Reserve's monetary policy. And once you have really taken this in, it's like it makes so much more sense to why they act the way they do. Even the congressman, like, this is one of the things. Like, we know that this monetary policy, this average inflation rate over time policy, is still in place because just like last week we did that video where Jerome Powell was testifying, right? And they point blank asked him straight up, you kept interest rates low during a time that inflation was running high, to like essentially to the amazement of all of us up here on this board, right? On this congressional board. And I'm thinking, why is that amazing to you? They said that they were going to do that. Like, that shouldn't amaze. I mean, they straight up said it. Like, in these speeches right here, that shouldn't be something that surprises you, right? So why are you surprised by that when that was exactly what they said that they were intending on doing? Like, even Jerome Powell just said it right here. So, like, he knew, and he even said it, like, right there. You were intending on this average inflation rate, which means that you're going to be above target for some time. Jerome Powell admitted that. He says, so when are you going to adjust inflation to the 2% target? He says, we're not going to review that until the end of the year. Like, this is the monetary policy until the end of the year. They're not the 2% target. It's average inflation rate over time, whatever the hell that means. They don't have a mathematical formula for it. Right? This is this is crazy to think, right? Literally, like, okay, let me see here. Thank you so much, Maxim, for the $5. Rats from the inflated stock markets are going to buy all real estate in this country once it starts to go down, leaving this crap for your 401s. That's interesting to think about. Like, it's all into investment groups, and then you're going to have to invest, your retirement fund into it. That's interesting to think about. Like, retirement funds going into investment groups who are buying real estate for the retirement funds that are driving up the house prices, making it very difficult to get into a retirement. Did I say that right? That's kind of what I thought. All right, let's cruise down here to the bottom. I'm sorry I'm skipping past all these comments, but we have hundreds of comments going on right now. I just kind of want to catch up on the conversation. All right, so let me cruise back up here. We got Alex Brown. Please show me how you do that. Please explain for the chat so we can learn. All right, I'm not sure what he's talking about. Icon of Sin, if Bitcoin goes up, all other coins go up. All right, Powell ain't going out. Ha ha. Power ain't going out? Oh, maybe that's it. Power ain't. BTC is definitely some cryptograph BS disguised as some financial tool. Huh. Growing life organic. I hear you. All right. I'm into Bitcoin. I like Bitcoin. All right. All Nighter says BTC has a small, simple computer code, no room for backdoor to rug pull. Yep, that's exactly. See, that's the thing about it. You think with all these computer junkies and all these people out there who are these hackers and everything else have access to literally billions of dollars that they could hack Bitcoin, you think they would do it, right? Like, go ahead and do it. Just do it, man. Do it already. You know? All right, the amount of construction and building now is crazier than in 2006 and 2008. It crashed then, and it only needs a small catalyst to crash now. Everyone better be ready. No, you're wrong. The amount of construction and building is not crazier than it was in 2008. All you have to do is just go and actually look at the building permit issuance right now, and you can actually see it's not even doing that much better than it was in 2019, right? Before COVID, it was actually about the same level as it was then, which is still an amazing underbuild for the demand of houses that is out there. So no, that's absolutely incorrect. The construction into things that were like bad projects, like maybe multi-level, multi-family residential places, like, apartment buildings, because I know of one right now that is in distress and not being worked on, and it's a huge apartment complex. I don't even know how many units are there. So things like that I can see like actually happening right now due to the fact that the rents went up so much. And when you see rents going up, then the demand coming from the investment community going into that starts to ramp up as well. So then you end up with like misallocated money. So you end up with like, malinvestments and stuff like that. And it's quite an unfortunate thing, but then you end up seeing projects going bankrupt and taking forever to complete and stuff like that. So anyway, I'm moving on. Alex B is very likely going to be destroyed. This is Brody. Destroyed in quantum computers. I wouldn't keep all my wealth there if that was where you were going. Yeah, I mean, I've heard that one too, Brody, but I mean, I don't know. Like, I mean, I guess if it does, it does, but I guess my level of concern over that is pretty low. Like most people, if they're buying into Bitcoin, they should be dollar cost. Here's the thing. Putting your expectations into something is probably going to end up causing a lot of pain and failure, right? So low expectations means that, like, hey, if things fail, whatever, you don't worry about it, right? So if you put high expectations into things, then you end up like suffering the consequences from that. So to me, even when I thought about buying into Bitcoin, I was like, how do I time it? How do I time to make sure that I get the best price on Bitcoin so I know that I'm going to, like, come out ahead? And never have I ever really been a decent market timer, like ever. Like I've tried doing trading and stuff like that, and there's people out there who do really well at it, and there's other YouTubers who are like very good at like chart analysis and stuff like that. I was never very good at that. So when I asked Lynn Alden, like, I mean, all night was there. We were talking with Lynn Alden, and I straight up said, how do I time Bitcoin? How do I know when to buy it? And she pretty much said, you dollar cost average for 4 years. Now, whether that's once a month, once a week, or whatever it is, you dollar cost average for 4 years. She said there has never been a time in their economic model that even if you had started at the top of that 4 years, you're starting at the height of a Bitcoin rally or something like that. There's never been a time in which that you would have come out under. So dollar cost averaging into Bitcoin, this is coming from Lynn Alden, right, is probably the best way that you can get into it. Now, whether or not it's actually a successful outcome, as far as being able to like sell your coins off for a profit or something of that nature, who knows what that's going to be like going in, I mean, whether quantum computing crashes it or whatever. Dollar cost averaging, it doesn't hurt, right? You don't feel it so much, like $50 a month or something like that. Yeah, it's like, it's a chunk of money, but it's not like once it's gone, then you kind of forget about it. You don't really stress it that much. And so in the end, if it does fail, it's just like, hey, you gave it a shot, right? And it might have been a lot of money that you dumped into it, but again, like, once a month, it doesn't really hurt that bad. Possibilities of it ends up being the biggest part of your portfolio quite by accident, like it did for me. Like, it's just like, holy crap, look at what happened here. It's just like, even now when the price comes down, all this, this huge chunk is just like, it's not surprising to me. It's just like, yeah, I watched a huge chunk come out of the portfolio. It's just like, it doesn't hurt my feelings. It doesn't, like, I don't have any reaction to it. I don't have any feelings about it or anything like that. All right, man, it's getting warm in this car. All right. All right. Andrew Hammond says, do you think that discounts in the grocery stores could be clouding any kind of disinflation? I'm seeing many things discounted that is making things cheaper, but might not be accounted for in the same calcs. Yeah. Well, absolutely. I mean, I have some saw blades right now that I'm selling basically 2 for 1, right? But it's coming up as one item, but I'm selling it for $2.99, but there's a package of 2, right? So what does that say? It means the saw blades are actually only $6.50, which is incredibly cheap considering that I would typically, even before the pandemic, would sell these blades or a similar blade for, say, $9 or $10. So it's like an incredibly good deal. And once people saw them, like they just picked them. They're like, man, this is a great deal. So I'm finding that with cereal. Like Sarah brought home a bunch of of cereal, not only in bigger containers, which was like, you have the shrinkflation thing going on. No, these are like bigger containers of cereal that she was bringing home that she got a really good price on, like buying bulk essentially, but it wasn't really bulk. It was just a bigger container, a bigger box. And then also buying like smaller boxes that have been bulked together. So it was just like a package of 2 of them that were not necessarily 2 for 1, but a much cheaper price. I'm finding those things happening quite a bit. And so other people are talking about it as well. And that's what's funny about it is like the single item itself, because it only rings up as one UPC, right? So it's just like, you scan it, bank one time, right? So it shows like the one box of cereal or the one sale of cereal is like, averaging this higher price. So it's not like the inflation is coming down when you scan that one item and then the price is higher, but yet it's getting 2, right? Same thing with like my saw blades. I was just saying that. So that's starting to happen. It's like, it's the opposite. It's not shrinkflation. It's like, growthflation or something like that, but the prices are still elevated. You just get more product, but it doesn't change what the like the individual prices of it. So, yeah, I think I got that right. Thanks for being here, everybody. We got 305 people watching with 136 likes. Go hit the like button, everybody. We'll get the algorithm spreading this video around for even more. I'd love to see it up to like 500 people watch. And, I mean, I've kind of gone through most of the bulk of the information. I think the first half hour of this video is just absolutely like critical information for everybody to internalize. And I left the links down in the description so you can go and read all those speeches for yourself. Alex, thank you for the $9.99. I really appreciate it. The convo was BTC going up relative to devaluing of the dollar. The goalpost changed to BTC derivatives equals BTC false. If you can't take your BTC off the exchange, then you don't own the real BTC. Yeah, I kind of agree with all that. I mean, I guess if like, unless you're actually holding the BTC, holding that Bitcoin, holding the private keys for yourself, that would be the ultimate of it, much like having the silver or gold for yourself. I don't know what the conversation was all about, but to me, like Bitcoin and everything that is involved with it is a global thing. Like, people say, well, the government will just outlaw it. Well, yeah, but then you got like all these other countries around the world that are still using it. So what does it matter if the United States? I mean, sure, it makes a big deal for the people here, but it doesn't mean that Bitcoin is going to fail as its ultimate, usage, like as being a transfer of, pretty much information is all it really is. It doesn't transfer anything really. But that information, just the number of Bitcoin that's in that particular wallet to another one, that's the only thing it really does. but ultimately that transferring is something that like no government can stop, and even if they try to outlaw it, it doesn't mean that it's going to stop even by that, because other nations can use it. It's just like there's no stopping Bitcoin at all, not in my opinion, except for the possible quantum computing thing, but like I put that on my very low expectations of problems. I got another one. Let's go check it out. Hey, thank you very much, Robert, for the $4.99. Do you believe the crazy increases in real estate prices increase true wealth? I don't think it increased true wealth. I think it had the wealth effect, which is something that's very interesting, and psychological phenomenon that happens when, it's funny. Like even I myself, I look at it as just like, wow, look all this Bitcoin go up, and I'm thinking, okay, well, maybe I can't afford, to take the family to, go on vacation somewhere or something like that. Like I look at this increase, not intending on selling the Bitcoin, just thinking, well, the increase in Bitcoin to my portfolio kind of gives me money, or gives me the idea that I have the money. And so now maybe I can go and be more easily, able to spend my money thinking that, I have this added value going on this particular asset. So I think the real estate price increases definitely added a wealth effect to a lot of people out there, especially if they didn't like take the equity out or sell their home off. But as far as the real effect, the real wealth effect, if it sustains, then yeah, absolutely. But if it falls away, then no, there's no real wealth there, right? You know, considering that it's very difficult to get into homes now, and the idea that the separation between the rich and the poor is going to grow, the inequality is going to continue, I can only assume that it's going to be very difficult for a lot of people to find a home to live in. It's just like they can't have, there's not going to be a home for everybody. It's just not going to happen that way. But anybody could get a home if they focused in on it, and made it their absolute goal. I have very little doubt in my mind that anybody could do it. If you listen to guys like Lumberjack Landlord and Dion and Zuber and all those other dudes, like they encourage people to get out there and get their first home, and they try and give advice and all kinds of stuff to doing it. I mean, I can't give my advice on it. I buckled down. I did YouTube videos. I saved as much as I could. I didn't buy anything, like nothing. Like I didn't spend money on anything until I had enough money to actually put down on a house. And it was hard. It was like, having that money coming in and thinking, man, I got a whole life of stuff that I have never done. It's like I would love to spend this money and go and do things and visit people and have stuff and whatever, but that wasn't my intended goal. My intended goal was to eventually get into a house. And as hard as it was at the time that I did it, I was so glad I did now. I mean, it's just like, man, I'm so glad I did. Okay, moving on. Look at all these comments, my goodness. All right. A face for radio with Richard Marks. I know the Publix is union and they claim shipping costs drive up prices. Probably some merit to that, but also they act like a monopoly. They place a store every 1 mile or two, crowd out any competition. Yeah, people are like, I know a lot of times people want to accuse the stores of gouging, and I mean, I work retail. And here's the problem with stores gouging is that you would really have to have them working in in cahoots. Like they would all have to get together. It's like, hey, we're gonna run lumber prices up to $13 for a 2x4. You do the same thing, and we're gonna totally screw all these people, right? But don't not sell them for 13, right? And so like everybody, all these lumber yards have to get together and be like, okay, well, we're gonna do this together, and we're gonna screw our customers over. And I'm thinking, I'm gonna sell mine for 12. I'm gonna sell mine for 12. I'm gonna sell all day long for 12, and I'll be like, oh, sorry guys, yeah, I know you had it for 13, but I just like I had a bulk of 2x4s here. I need to get rid of them, so I sold them for 12. Sorry, right? And they would be like, oh, screw you, I'm selling them for 11, and then I'd be like, okay, I'm going down to 10, right? Because this is competition, and this is how we fight, because we're all fighting for our customers. Every last one of us is. I mean, as a retail center, and I know it is very difficult to try and acquire the customers to build a house if you are not offering the absolute dirt cheapest price you possibly can for that lumber and plywood. I mean, you don't even sell lumber and plywood for a profit. You're actually selling that lumber and plywood so you can sell the nails and screws and glue and everything else that goes with it, because the profit's not even really in lumber. It's the bulk of the entire sale of what we do, and we're trying to do that part so we can sell all the other little tiny pieces that go with it and get our profit from that. That's literally how lumber yards operate. And to hear that people were saying that they were gouging the customer was complete horseshit. I mean, and that's the only way I can describe it as, because it was like that was not taking place that way, and especially considering that I could call it out. Like, if the uneducated economist can call it out before it happens, then it's not a conspiracy. Like, how else can I do it? Like, am I conspiring in there with them, or am I just a really good lucky guess? Right? No, it's because I could see it for what it is. Right? The bullwhip effect was in full swing. Right? All right, moving on. Why would the builders buy retail though? They don't. Is it the permits and restrictions that have exploded, at least here in Oregon? The restrictions, yeah. I mean, there's definitely a lot of restrictions on it. Why would the builders buy retail? Well, here's the thing. Every single lumberyard has retail prices and builders prices. So if you're a builder who's coming in buying stuff to put a house together, generally you're doing it through an account that you have. That account offers a discount to most of the purchases that you are making. A lot of times what you can do, if you have a major project and you need a bid on it, you can buy the entire bulk of material, or at least get a quote for a certain amount of days. And when the lumber prices were running up, that those days were like literally like 5. Most lumber yards will hold prices for 30 days. So you can estimate your prices, estimate your increase on prices or the changes to it. But ultimately, a lumber yard will offer you a discount on a bulk of material. And that's typical of almost every single lumber yard you could ever go to. Now, I mean, at least the ones that I worked for. You probably have some big home centers that don't offer stuff like that, but if you're going to a building supply place, most of the time that's going to be the case. Now, again, you can even as an individual retail person, it was just like, hey, I'm going around getting bids for a deck package. You bring them a list of materials, and a lot of times they will offer you a discount for an entire bulk purchase. If you go in there and just piecing your deck together, and you're going down to the lumberyard with your pickup truck and you're picking up a dozen boards or so, you're probably not going to get the discount, right? Because you're only buying a few boards at a time, even though to you, you might be spending thousands of dollars down there. But if you're just running down and picking them up a few boards at a time, that's not really in line with what it is that the lumberyard, like the lumberyard has to deal with every one of those transactions. That's cost to the lumberyard. They want to do one transaction. One. Boom, here's your material, go, give me my money. Right? Like that's the ultimate for a lumberyard. Not to do 400 little tiny transactions, that's cost the company money, right? Even though to you, you might think about it, I just spent $10,000 with you. It's like, well, you spent $10,000 with me over the course of 18 months, right? That's a huge difference inside of that. It's important to understand how retail operates, and how that actually incorporates into like commercial projects as well, or commercial accounts. You're smarter than Joe Biden. Are you talking about me? Who's Joe Biden? Is he important? I don't even know what that dude talks about. All right. Robert, 499. Is it possible the lowering of rates is artificially low levels was planned to create wealth? No, I don't think that. I don't think that was planned to create wealth. I mean, not in my opinion of it. Now, did it? Yeah. I mean, people who understood it took advantage of it. Now, I mean, could they have prevented that from taking place? I doubt it. Not from people who truly understood. This is one of the reasons why they put out so much misinformation within the news, within just everything out there. I mean, nobody talks. I mean, how many people are talking like me? Right? How many people talk about like these particular speeches that are coming up, how the Fed, how their monetary policy was coming to an end because of that neutral interest rate being so close to the lower bound of zero and them not having any kind of effective tool, how the future inflation expectations were needing to rise, and how they planned on doing that with average inflation rate dating back all the way to all these speeches. Like, I mean, it's just like hardly anybody talks this way. In my opinion, the Federal Reserve is really trying to maintain the liquidity for the people out there, like for the whole world. Because you got to think, it's not just the United States that they're dealing with the world reserve currency as well. And this is a very difficult task to try and maintain a world reserve currency at the same time have an effective monetary policy for the United States. I mean, there's two things that are happening here at the exact same time. And it's like a lot of people just focus in on like, the United States and our monetary policy, forgetting that we have this world reserve currency that also impacts the dollar and the strengthening of it or the weakening of it, depending on which way you want to look at it. Now, in my opinion, as the world grows, right, as there's more transactions taking place with ever increasing amounts of people who are then involving themselves into the economy, the demand for dollars ever increases. Right? In order to provide the liquidity, the United States, the Federal Reserve has to try and come up with some concept in order to get the dollars out there to the rest of the world to provide that liquidity, right? Or else the demand for dollars would absolutely skyrocket and it would destroy the production of the United States, as nobody would buy anything from us because they simply wouldn't have the dollars to do it. So it's important that we buy their stuff and they buy our debt, and that's the channels in which that it has to operate. And again, like trying to create a situation in which that it appeases the United States and their monetary or their economy through the monetary policy, while at the same time providing enough liquidity to the rest of the world, is a very difficult task. It's one of the reasons why I honestly think that the BRICS nations is a brainchild of the Federal Reserve, saying, man, can you please have some sort of other system out there so that we don't have to be responsible providing all the liquidity for the entire world, considering that we do pretty much the majority of all of it, and a distant second is so far behind us that there's nobody who can even really attempt to even try, right? And that's my honest opinion about that. Anyway, moving on. Uh, let's see here. Uneducated. This is Matt. Thank you, Matt. If you want an affordable family vacation, you should check out national parks. I'll bet you're not that far from Olympic or Redwood National Parks. Actually, yeah, you're true. Like the Oregon coast is probably like I remember looking at a map of like all the campgrounds down the Oregon coast, and I swear there's like you can't even drive like 10, 20 miles without running into another campground, it seems like. So like the Oregon coast is just full of them, and I would love to go down to someplace like I don't know, maybe like down towards the southern border, go camping and do like gold panning or something like that. I think that would be like a fun thing to do. Yeah. Now I think would be like, it could be cheap and rewarding. Some poor guy's BTC is in the land of Phil. He bought earlier but threw away the flash drive and drive in real life. Yeah. And that's one of the reasons why I like Bitcoin, is just because really ultimately there's no more coins coming out. All the coins that are out right now are essentially all the ones that we'll ever see. Yeah, they're going to be, trickling out for the next whatever 100 years or however long it's going to go for. But it's at like what, 19 million or something, and there's only going to ever be 21 million. So essentially they're all out now, right? I mean, yeah, they'll bring out some more, but not a significant amount. And to think about how many are lost and now how many are held. I mean, really, if you have one Bitcoin, you have what only 21 million people will ever be able to do in the history of time, right? Is own one of those. 21 million people only 21 million people could ever possibly do it. Now, that's over the course of the entire lifespan of like the creation of Bitcoin, of the new Bitcoins, right? Now, if you take that back a little bit and say, well, how many are lost? How many are sitting in, wallets that are not accessible or whatever? I guess that would be kind of the loss. That leaves very few Bitcoins out there, or a hell of a lot less than 19 million of them. And so now if you have one of like what a handful of million people could do. Maybe a dozen or 15 million people could do. Who knows? Maybe 18 million, right? But regardless of even if it was 19 million, that's still just a handful of people who could ever own one Bitcoin. That is like incredible to think about. Now, I have about a half a Bitcoin. That means that like less than 40 million people could ever possibly do what I done. Right? Is to own half a Bitcoin. That's crazy to think. What time? All right. Wow, look at all these comments. Alright. Alex, you don't have the answer, Moody. Okay, let's see here. Icon of sin. Most Bitcoin is lost because people forgot the password. All Nighter says, right, but it's a win-win because who else is going to buy such a dump and the guy needed to sell? Well, I guess you guys are talking there. What does that say? And if 21 million people decided just not to sell, then it could be worth a lot. I mean, really, I look at silver kind of the same way, I mean, you think about it, what is it, like 900 million ounces, something around that is produced annually, like as the global production. And you think about it, like 900 million ounces, half of that goes to industrial use, which leaves what, 450 million ounces? So 450 million ounces for investable purposes. And you have 365 plus million people here in the United States. If everybody in the United States tried to go out there and buy just 2 ounces of silver, they would eat up all the investable silver out there for a year's production. And that's just the United States who decided that they were all going to go out there and try and get 2 ounces of silver. Now, if you think about it, if they tried to go and get 3 ounces of silver, that would eat up the entire global production before industrial use. Now, if you start including India and China and Russia and, all the European nations and Canada and Mexico and the United States and everybody who decided that all at once that everybody was going to go out there and try and get just 1 ounce of silver, it would be immediately gone. Like, there would be none out there at all. That's really incredible to think about. Like, the second most vital commodity to our entire existence, and it is so close to, like, extinction. All people would have to do is literally try to get 1 ounce and it would be gone. Right? Gone. The price of it would go through the roof. As people who are building cell phones or computers or whatever it is that they need for their little project or product that they are producing, would pay any price for it because they only need just a little bit of it. So they'll pay a lot to get that chunk of silver so they could get that little piece into their product. It's incredible to think about. Like, there's nothing else on the planet that I see as so unloved and unvalued and unappreciated as much as silver is. It's crazy to think. All right. Thank you very much, Robert, for the $4.99. Could it be inflation was planned to be effectively help U.S. erase debt by paying back the cheaper dollars? I mean, I know a lot of people say that. I mean, in that it seems reasonable to think that, but there's nothing within the monetary policy that I could find that states that. Now, the Fed does say that the government is on an unsustainable debt path. Like, they cannot continue doing this, which is one of the reasons why I keep bringing up that Ben Bernanke speech talking about the purchasing of foreign assets, like basically buying the debt of a foreign country. Because you think about it, if you were to try and get dollars out there to the rest of the countries, wouldn't buying their debt be like the easiest way to do it? Like, you might not, like, I don't think the Fed would go directly to those central banks of foreign countries and directly buy their debt with US dollars. I think they would go through a secondary market because I believe that would be more along the lines of their charter. But from what Ben Bernanke was saying within that speech, they have the legal authority to do this. Like, they already do. And yet, like, I've never heard anybody bring up this topic, right? So, I don't know, like, that, I mean, so I guess back to the original question, is the increasing of inflation meant to erase the debt? I don't believe that's the case. I mean, whether it does or doesn't, nothing within their statements or their policies, from what I have read, says that. Like, at all. Like, nothing. Like, I cannot find that within their statements. Same thing with, like, a lot of stuff that I mean, people have a tendency to say, like, the Federal Reserve is going to do this. And I'm like, okay, where do you find that? Like, I can see the theories behind it. I can understand, like, the idea and the logical aspect of it. But what I don't find is the statements coming from the Federal Reserve saying that they were planning on doing that. Like a lot of it, like people say XRP, right? XRP is going to be like, the coin that, everybody uses for liquidity purposes within the banking system, blah, 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 right? Instead of like the Fed coin or something of that nature. Okay. I mean, it seems reasonable enough. I hear enough argument about it. It seems to be very prevalent out there within the the macroeconomics conversations. However, I cannot find any statement coming from the Federal Reserve saying that. Not one. Not a single one. In fact, people sent me all kinds of documents or links to Federal Reserve websites that had mentioned XRP, but all of them were like letters to the Fed or discussions about like different cryptocurrencies. Nothing about saying how they're going to incorporate it into monetary policy. It was suggestions and theories, but that's all it was discussions. They weren't like any kind of real documents or ideas of like what it was that they were planning, not like, stuff like monetary policy for a low neutral interest rate world. However, what I did find from these things is how they talk about the regulations of stable coins, right? So a stable coin basically being a cryptocurrency that trades one-to-one with the dollar. And so for every stable coin, there's essentially a dollar sitting in a vault somewhere. And now regulating those stable coins does seem to be something that is in discussion with the Federal Reserve. Been something that I have found many times coming from the Fed is that monetary policy that is conducted with the dollar and any currency that is trading one-to-one with the dollar, that monetary policy will then transfer through the dollar into that other currency. So if there's a stable coin that's trading one-to-one with the dollar, whatever's happening with the dollar will then transfer into the stable coin, so long as the meets the regulations of the Fed or whatever they assume that to be. They would have to ban all the other cryptos to make it worth more than others. Let's cruise down here to Flap Overspeed. Thank you for the $1.99. Very generous of you guys to continue to contribute to the Uneducated Economist. ERA 2025. How about that? ERA 25, $1.99. BTC is purchased with fiat and they print the fiat. Yeah, true. But gold is purchased with fiat. So stakes are purchased with fiat. Debt is relieved with fiat. I mean, what's the point? I mean, I don't look at like dollars. I look at dollars as something like gold and Bitcoin and whatever, ammunition. It's just like, to me, it's just another thing that's out there. I don't really like think about how much Bitcoin is worth to the dollars. And I don't think about how much like silver is worth to the dollars. Like, to me, I don't see it as that same thing. I see it as its own thing. Like, dollars are either in demand or they're not in demand. If they're in demand, then these things end up being cheap. If that is not in demand, these things end up being expensive, right? That's like, it's to me, it's just much easier to look at them as an individual thing and not comparatively to the other. Like, oh, BTC is cost this much, it's going to be worth that much, it's whatever. Like, to me, that doesn't mean anything. Like, it could be, you could say, well, it's going to be worth $500,000 one day. And it was just like, well, what if $500,000 is the average income for a year? Is that big of a deal? It won't be, right? So it doesn't matter to me, like, what Bitcoin is going to be worth in the future or whatever, or anything like that. Because, I mean, if it was $500,000 comparatively to what things are today, I'd be real excited about that, right? But if it comes into 500,000 and I'm earning $500,000, at my day job, then well, who cares, all right? It didn't do anything. All right. Right on. So we're at this for an hour now. You guys having fun? All right. If you was this guy in, if you was the guy, oh, here we go. If you was the guy in charge, would you make fiat money like crazy? Well, I don't, that's, like, why would you make it? The whole idea See, here's the thing about like understanding fiat currency is to try and like to me it's better to try and understand it that it's not an evil thing, right? Even though it can create some really dramatically bad situations for a lot of people out there, and understanding and knowing that it does create a separation between the rich and the poor, so the inequality grows from that. But it's not an evil thing if it's benefiting you, right? Like if you could figure out how it is that this system works, and then all of a sudden you elevate yourself and you're sitting there with like, a house and a hot tub and a new Camaro. I mean, is that a bad thing? Like, is that an evil thing that you figured it out? Like, and I mean, no, it's not. It just means you figured it out, right? Knowledge is power. And so, like, when it comes to fiat, I mean, to think like, would you print it like crazy? That's not what the Federal Reserve was intending on doing with it. Like the whole idea of the Federal Reserve was to try and provide liquidity during times when the economy was ramping up. Like this is what it was sold as, right? Now, it eventually turned into something different, but when you're limited by the amount of gold that you have to do transactions with, like people would be like, man, I got a lot of business that I want to do here. Don't you want to buy my product? And then people are like, yeah, dude, you got a great product, but we don't have any money because we don't have any gold, right? And that's the whole problem is that all the gold got concentrated into these other people who were doing business before you and they're saving it. And that's a problem because now we don't have the gold down here in the economy to do transactions with. And so we're very limited on the amount of transactions that are going to happen, which limits the amount of growth that's going to take place. So now, if the Federal Reserve could step in and say, well, here's some fiat paper currencies to do your transactions with, and they're as good as gold. You can transfer these dollars to gold, and it's just as good as gold. Right? Well, people would be very confident in that. And they get to do business now because all these paper is now providing the liquidity out there for everybody to do these transactions. We're not limited to the amount of gold that we have to do transactions, which is wonderful for economic expansion. So as the economy is ramping up and people are like demanding more liquidity, more transactions, right, or the ability to do more transactions, the Federal Reserve is injecting paper currency into this economy. So everything ramps up. People are like really happy with it, and they're able to do all these transactions. Well, the business cycle comes to an end, and things start to slow down. Well, as that starts to take place, the Federal Reserve is meant to pull the money back out of the system. Right? This is what they were intended to do. So as the economy ramped up, they would add liquidity. As the economy slowed down, they would pull the liquidity back out, and they were going to have this elastic money supply to keep things, to keep the business cycle from pretty much devastating people was the idea of it. Because essentially people would just run out of money because it was hoarded up into the hands of a few who were the most industrious people, right? This is all kind of like part of the Cantillon effect as well, right? I mean, if you think about it on a larger scale, the United States did the same thing when it came to their production. They sold all kinds of wonderful stuff to the people. The people sold us or sent us their gold. We had all the gold. They didn't have any ability to do transactions anymore. So we were like, hey, we can just fire up this thing and send fiat currency out there to the rest of the world, right, in order for them to do the transactions. Otherwise, we were going to have to send the gold back out there because they were going to stop buying stuff from us and we were going to have to start buying things from them, which meant that the gold was going to leave. And we were like, hell no, let's keep the gold and send them paper, right? Because besides, there wasn't enough gold for everybody to do transactions with anyway, and paper provides all the ability to do all the transactions you want. Now, this is really wonderful for doing all the transactions and the commerce and then everything that's happening as far as economic expansion goes, but it's really terrible for the idea of preventing inequality because what this does is it creates inequality, right? It makes it worse. Now, granted, you can bring in some better living standards or at least a higher living standard to the masses with this, but still you're separating the rich from the poor. Like the rich have an insane amount, stupid amounts more than everybody else as far as the masses go. And if the fiat currency continues to inject into the system, this will continue to grow. And this is one of the reasons why it's so difficult to buy a house right now is this exact thing, right? So I wouldn't print more money, but then again, what difference, like at this point, what difference does it make? It's all about how you understand it and what you plan on doing with the knowledge of it. Like you gotta know that there is no reversing. There is no going backwards on this. Like it doesn't go backwards. It fails. That's going backwards. Going backwards is a failure because it's a very slow climb up to the top, but it's an instantaneous drop, right? And it literally happens in no time at all. A lot of people feared that was taking place already, but to me, like when I saw it all happening, I was like, nah, I mean, I knew it wasn't going to happen. Like I knew the failure of the dollar wasn't going to take place because it was planned. Like, I mean, when you understand monetary policy the way I did going into the pandemic, I mean, I didn't know exactly how it was going to play out, right? But once it did, I was just like, it was very clear to me what it was that they were intending. They were intending on raising the inflation expectation over the long term, and it's totally working. All right. So I got another one down there. Pete N, thank you very much for the $5. For the $5 super sticker. Very cool of you guys. And we got ERAW25 with the $1.99. What prevents people from hoarding BTC? Nothing. That's the reason why I don't believe it's going to be a world reserve currency. I just simply don't believe gold or Bitcoin will ever be a world reserve currency. Neither will any BRICS nation or anything else. Like the dollar is the world reserve currency, and until it fails completely, like Federal Reserve notes are literally being thrown onto the street because nobody wants them, then another currency will step in. Now, up until that happens, understanding Gresham's law will prevent any other currency from stepping in, except for possibly like stable coins, because stable coins are already trading 1-to-1 with the dollar, but it doesn't necessarily have to be backed by the dollar. You see, like everybody starts using stable coins thinking that they're trading with dollars, just like they were trading dollars thinking that they were dealing with gold, right? Same kind of scenario. Once you have the stable coins in operation, everybody's using them, then what do you back the stable coin with? Anything you want, right? So this is how they can actually change the currencies around. But as far as introducing a new currency into the system, not going to happen, right? Because of exactly that. You're going to find people hoarding. Think about it like this. If you only had, let's just assume that you believe in Bitcoin, okay? Much like you might believe in gold, okay? And let's just assume that you hoard, like you like Bitcoin, you want to use it, and you're going to go to a store and you're going to purchase something, and now you have fiat dollars, you got your paper currency, and you got your phone with Bitcoin on it, right? And you go to the merchant and you're like, hey, I want to buy a hamburger from you, right? You got this vendor there, he's selling burgers, and he accepts Bitcoin or he accepts cash. And he says, go ahead and spend whatever you want with me. Now, are you really going to spend your Bitcoin, or are you going to spend them folding paper? Like, which one are you going to put in your pocket? The folding paper dollars, or are you going to put your phone in your pocket and spend the dollars, right? Because, like, dollars are not worth it, right? Like, I mean, you got one of the two, right? And you're a believer in Bitcoin, well, then you're probably going to hold on to the Bitcoin. So people are going to hoard that Bitcoin and they're going to spend the dollars, right? And that's going to be the same whether you're a nation or you're an individual person or anybody else out there. So if Bitcoin was like a world reserve currency, then what would end up happening is that the most industrious nation out there would end up hoarding all the Bitcoin, denying everybody else the ability to do transactions, and then those countries would start going into depressionary, conditions. So you can't have a fixed currency and maintain stability within the world economy. It just doesn't work like that. Right? You have to have a flexible, elastic currency, and then at some point it doesn't work. It just fails, right? So like the inevitable outcome of a failure is going to happen. Like there is no doubt in my mind. How that is that they can continue on with the system, I don't know. I mean, that could take, they can continue it on for another 100 years. I don't know about that, but it's just like how it is that they keep the system going is pretty much the trick of the game now, especially when you think about the digital aspects of it. Once you have a digital coin and negative interest rates, now you can really screw with the economy in a much different condition than anybody ever thought that you could, But still, the underlying pressures are still going to be there. Gresham's law is still going to exist, no matter how you try to manipulate the situation. All right. Okay, let's see here. Mr. Improvements. Yo, what happened in Russia is so messed up. 500 to 150 to 100 soldiers rushed in a concert place and started shooting innocent people with Islamic State took the blame. Who paid them and why? Yeah, I'm not getting into that. Sorry, man. We're going to talk economics, but I'm not going to get into those things. I mean, it's an important topic. Don't get me wrong. I'm not trying to deny the importance of it, but it's not. It's that's not the that's not the direction I want to go with the channel and its content. All right. Do you think China adopting Bitcoin is a threat to the U.S.? No, I don't, and I don't think they can adopt Bitcoin. I think that they would be in a very dangerous situation to attempt to try and do all their transactions in Bitcoin. Ultimately, there's nothing that's going to change, guys. Okay, there's nothing that can change the situation that we are in until the dollar completely fails. And I don't care how many BRICS nations get together to do their own sovereign debt deals. Fine, go for it, guys. In fact, that's a benefit to the United States because now we don't have to print up as much damn money in order to provide the liquidity for all you people. Go ahead and do it, right? Here's the problem with it is that nobody wants your damn currency, including the other BRICS nations, right? Just think about that. Like, I mean, Turkey wants to sell all their products, right? Who the hell wants Turkish currency? What is it, lira or something like that? Nobody wants their currency, right? But they want people to use their currency. They want to use their currency. They want to spend their currency with other people. Nobody wants it, right? Including those BRICS nations. So what it's going to come down to is they have to have a singular currency between them all, which means that they have to trust each other. They have to put together a basket of currencies that is now like having some sort of trust, element of trust with the other ones, that they're not only going to pay their debts, but that they're not going to lie about what it is that they have going on within their own economy, right? There's a lot of trust factor that comes to that because now it's their debt issuance that is now the asset. And people have to trust that. They have to trust, you have to trust that China's going to pay back their bond. You have to trust that Russia's going to pay back their bond, that Brazil is going to pay back their bond, right? You have to trust that. And most people don't trust China. Most people don't trust Russia, right? Including the rest of the world. And now there is a handful of people who say, well, we're kind of buddies. I mean, we can kind of trust each other. That's not confidence. That's not the world's confidence, right? That's just a handful of these nations. So now we have to figure out which one of those nations is going to have the most confidence of all of them, because that's the one that's going to have to issue out the debt to replace the U.S. treasuries. Now that country is going to have to go into some significant amount of deficit spending in order to provide the world with that safe and liquid asset that everybody now trusts, which is their debt, their bonds, right? How is Russia going to do that? How is China going to do that? How are they going to provide the world with that safe and liquid asset when they want to be the ones producing and selling stuff? They don't want to sell their debt. They want to sell their production, right? The United States is the only one who wants to sell their debt. Everybody else wants to sell a little bit of debt, but they want ultimately everybody to buy their products. And so keeping the idea of like getting out of the dollar is going to hurt those nations if they do not have a common form of currency. And if you have no trust amongst each other, then you're not going to be able to come up with a common form of currency. And if you make it as gold so you don't have to have any trust, then the most industrious nation is going to hoard all that gold for themselves, and everybody else is going to suffer in poverty and misery. There's very little doubt in my mind about that. And so go ahead, man. I mean, all those BRICS nations who are setting up transactions, and that actually is a benefit to the United States because now we don't have to keep going into as much deficit spending or debt creation in order to provide the world with that liquidity. It's actually a benefit to us. And people don't realize that, It alleviates the need that comes when there's a liquidity. Like, we're going to face this again. There's going to become another liquidity issue where there's not enough dollars in the world, and the Federal Reserve is going to have to fire up the printing press again. Like, I know that's going to happen. The debt's eventually going to start to come due, and the people are going to have to demand dollars, and that demand for dollars is going to increase, and they're going to have to figure out some way to provide the liquidity out there to the rest of the world, or else you're going to have a spiraling debt collapse. All this debt that is issued in dollars gets used as dollars. Think about it. Brazil, go and just type it in right now. Brazil dollar denominated debt. All right. And you're going to see that they have taken out, like, I forget, it's quite a bit. I mean, I don't want to make up a number, so I'm not sure exactly what it is. But it's over the course of the next 10 years that they are going to be needing to acquire some sort of ability to get dollars. Now, whether it's to sell their production or to sell more debt, or I don't know. I mean, just I don't know how else they're going to get it, other than, selling of their products or the issuing of debt. But for the next 10 years, they have promised to acquire dollars to pay back that loan. Like US dollars, not yuan. So, I mean, this is important to understand and know. Okay. Are you going to slice up little small chunks of gold to buy your Starbucks coffee? No, I'd spend dollars. That's right. I was reading up on the Greece debt crisis again. Debt crises are interesting to observe. One Bitcoin equals, what is that, 100 million Satoshis or something? Gold is universal, not founded in Bitcoin, not found in Bitcoin USD. Retail has been careful this crypto cycle. Retail has been careful this crypto cycle that is super weird. Just don't FOMO and wait patiently. We see ETFs outflows. Even see the low. Oh, where are my glasses? I even see the low in early May. We might see dumping halving. Huh. I went to the casino to gamble and I asked, do you take yuan, francs, pounds, pesos? And they say, no, only USD. You are wrong. I love how I get that. I don't know if that was towards me. Anyway, what do you think about ISO 2022? I don't know. I remember when Gumball was one whole Bitcoin. When a Gumball. Oh, yeah, I remember when it was $18. That's when I first tried to buy a Bitcoin, is when they were $18, and I was gonna throw one around with my buddy Dan just to see how they worked. So crazy. And I remember a guy tried to sell me a Bitcoin for $7,000, and it was like a physical token type Bitcoin that he had, and it was legit. Somebody had put like a Bitcoin on like a, I don't know, like on a card, and it had like a little token and had like the private key underneath a decal or something on it, much like that coin that I have. All right, the institutions are the ones driving the price of Bitcoin. Retail has not money to move the crypto market. The institutions are the ones. I don't know about that. Bitcoin is a global thing. Like, I think the individual retail investor, like just the guys like you and me, I think we can definitely move the price of Bitcoin. I mean, considering that there's far more of us than there is of those institutions, I mean, acting individually is what I guess I'm getting at. I like I said, you don't have the capacity for an actual argument. Well, you guys, you must be talking to each other there. Let me just cruise down here a little ways. Hey, lumberjack landlord, right on. No way is housing going to 2008 prices. Yeah, I don't believe that either. Bixweir was giving 2 Bitcoin per subscription to his channel back when it started. Ha! Wow. How to solve inflation? How to solve inflation? Why would you want to, like, the Federal Reserve doesn't want to solve inflation. They don't want to solve it. There's no need to solve inflation. They fixed the problem. The problem they needed to solve was inflation that was too low rather than too high. They fixed the problem. There is no solve. Like, they got it where they wanted. They're like happy. You're like, yeah, we did it, guys. They're back there giving each other high fives, like, woohoo, we did it. We got a monetary policy back, man. Good old credible threats. Uh, you literally have no more information to support your reasoning. I guess you guys are talking to each other because I have no idea what that means because I have all kinds of information. All right. I'm assuming you're all talking to each other on this one. All right, here we go. Uneducated Economist. ISO 222 is about banks replacing the SWIFT system they all use by 2025. Oh, okay. I see what you're kind of getting at. Um, I think that's a lot to do with the like, doesn't that have a lot to do with like the Basel Endgame, where they're trying to get all these banks to kind of basically be on the same page before a certain time in order to deal with international banking transactions and stuff? In fact, we just did a speech about that not too long ago. What is it called? In fact, I have it on here. We reviewed a speech on that one. And so I'm not exactly like familiar with what it is that you're describing here, but it does seem like the Federal Reserve and, oh, I guess my computer died. Um, it seems like the Federal Reserve and the regulatory authorities or whatever are trying to condition the banking system to deal with like more of an international transactions and getting the banks more aligned with a like more of a familiar regulation amongst each other, right? So that it's not like, you got one system that is totally obscured from another system. They are very much kind of in line. The problem that the Federal Reserve was facing with that is that they cannot condition their entire banking system to do that. So they have to do what they refer to as tailoring. But that's what I know about that part of it. As far as like any kind of real change to it, um, outside of that part of it, I haven't really, given it, I guess, much information or given it much research into that information. Hey, uneducated economist, would you ever sell your car? Well, you want to buy the Toyota? Huh, I don't know. Maybe someday if I get the Camaro, maybe I would. All right, and I don't really anticipate on getting a Camaro anytime soon. I agree. The presentation appears as a one-trick pony. What are we talking about? Uh, I love the banter. Has me cracking up. I love my third-person perspective. All-nighter hider. All right. All I'm doing is saying if you're white in this country, your passport's ready. Huh. All right. Okay. What do you think about the Fed planning to ease quantitative tightening? Do you think they see problems ahead or just want to pump more liquidity in an election year? I don't think they give a shit about an election year. I really, 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 really don't. And that is like, I mean, the reason why I don't is because I can never find anything within one of these statements that says anything remotely close to that. Like nothing, literally nothing. Now I can see where a lot of people would want to say that or anticipate it or believe it or whatever, but I just don't agree. I don't agree with that at all. So I don't think it's anything to do with an election year. Now, if you want to take it back months, I don't know, even probably going on years ago now, they know over the course of this summer, there is going to be liquidity issues. They are already planning for it, right? And this is important to understand because this is not going to be a spontaneous thing, although the news will portray it as that, right? The talking heads will talk as if it's like, oh my gosh, this is now occurring, like they weren't expecting it, okay? The reactions from the Federal Reserve will seem spontaneous, right? They will seem like, oh, we got this new condition that we now need to deal with. The Treasury will be responding in the same fashion, as if, oh gosh, we got this new thing that is now happening in our economy that we now have to set up these different programs or policies. When the liquidity issues begin, and they don't know exactly when, it's like literally like a tipping point, right? It just eventually gets to a point and bam, all of a sudden there's enough liquidity, now there's not enough liquidity, right? When that begins to happen, there is going to be issues within the bond market. You're going to see interest rates jumping like you wouldn't believe. And this is where people are going to be very concerned about putting their money out there towards, a particular asset, some sort of interest-bearing asset. They're going to be very cautious about doing that, and they're going to want to hold on to that cash. And the hoarding of cash is going to start pulling that liquidity out of the system. This is at the same time right now, you have to think the quantitative tightening is happening, and they're pulling cash out of the system as well. Right? So if this pulling of cash out of the system begins to grow big enough, right, eventually it reaches that tipping point where there's not enough liquidity in the system. Okay? When that happens, you're going to see the interest rates rise dramatically as people are hoarding onto that money and not buying those assets, which would bring the price, bring the prices up and the yields down. So the Treasury itself is going to be stepping up and buying bonds, right? Their own bonds back, right? Literally, going to the market and saying, okay, we're going to pull these bonds off of the market, right? The reason that they're doing that is they want to make sure that they keep the bond market liquid. And now they have made this idea, this statement, this future planning. They have stated this already from their own words. There was news articles that have talked about it, back when they made this announcement. But it is a very quiet thing. Nobody actually talks about it anymore. They don't bring it up in the news like, hey, we're going to plan on doing this bond buyback in the middle of the summer to make sure that the bond market stays liquid. They do not bring this up because they are never going to say that, because it would spark off a panic. Right? So they said it months ago, planning for it, knowing that there is going to be liquidity issues at some point. When that occurs, right, the Federal Reserve is not going to adjust, right? Everybody anticipates that the Federal Reserve is going to be going into quantitative easing or something, because that's what they would typically do during the liquidity issues, right? Is to try and provide liquidity to the market. However, they're fighting inflation, right? And so, which I find very comical, but they're not going to adjust their monetary policy, not in the same sense that most people would anticipate that during a recession, lowering interest rates, going into asset purchases. They are going to allow the liquidity issues to continue. And that's why the Treasury is going to be buying back its own bonds. Just the threat, the credible threat of them doing that ought to bring the investors into that part of the market, knowing that they will have an outlet, the Treasury. Right? So this ought to bring the willing market participants into the system. Just the announcements, the narrative being pushed out there that the Treasury is buying back their own bonds. It'll be spread across the mainstream media like you wouldn't believe. Everybody's going to know that the Treasury's in this crazy new program that they haven't done for 25 years or whatever it is, and buying back their own bonds, and the whole market's going to flip out about it. And there are going to be all kinds of conspiracy theories about that as well. But you're going to remember this video, and you're going to remember that I've been talking about this for months now, and that it's not going to be a surprise. However, the market will be surprised by it, right? The people's perception will be very extreme, but the ultimate conclusion of it all will just literally be an entity that is going to be there to provide the liquidity to the bond market, and knowing that backstop is there ought to bring in the investing participants, the market participants. Right? That's how I feel is going to happen. Anyway, I'm making that call now, and I don't know how many other people have made that call yet. But all right. Hey, we got Dylan in here. Right on, man. I made your video for it. Question, what's R-star? Oh, that's a good one. R-star is, okay, I've tried to understand R-star. So the Federal Reserve, they know that there is no way of telling where the neutral interest rate is. There is no, you can't type into Google, tell me what the neutral interest rate is today. Nobody knows. Nobody knows exactly what the neutral interest rate is at this exact moment. Now, you can go back in time and you can kind of see where the neutral interest rate is, but you can't really tell where it is this exact moment, because a lot of it has to do with future inflation expectations in accordance to where inflation is today and how the people are reacting to the current inflation and what that will mean for the future inflation expectations and all this other kind of twisted words that they use in order to come up with this R star. So pretty much R star is a really complicated mathematical formula incorporating current inflation, future inflation expectations, and the current Fed funds rate to come up with this idea of where neutral interest rate could possibly be today. Right, and that would be R star. So when the Federal Reserve is looking at R star, they are assuming that the mathematical formula for the current future inflation expectations, according to what they have going on today, is projecting where that neutral interest rate is. But it's not an exact formula, and nobody knows right exactly what that means. So that's the best that I can describe it. When I go and I research R star, I cannot internalize it in the fashion that the Federal Reserve is stating it. Like, it is too complicated and I don't get it. Like, but what I explained just now is the most that I can grasp out of R star. Somebody else might be able to explain that a whole lot better, but all the personal research that I've tried to do to understand R star is about, that's about the limit of it, is what I just told you. But I guess really, if to define it simply, is the Federal Reserve's idea of where neutral interest rates are today. All right. Okay. Brody says, Dylan, they plan to close that spread by getting investors to think that the dollar will fall in value, so people will chase into assets like equities, as I understand it. Oh, is there a question up there? Let me find Dylan's question. Question, could you explain how the Fed plans to close the spread between corporate debt and the Fed debt? Well, okay. So I think it's happening now. And actually, there's a good article. When after I upload this video, or after we end the video, I will go and grab the link to that article, and I'll put it in the description of this one, or I'll pin it in the comments, is what I'll do for you. But I believe that it's happening now, that the corporate debt, the yields on corporate debt are coming closer to the treasury debts, to the yields on the safe and liquid assets like the U.S. Treasuries. Now, there's a lot of reasonings that this is happening. It happened back during the pandemic with the setup of special purpose vehicles and the Federal Reserve making that announcement that they were going to be buying corporate debt. The rush into corporate debt, right? This brought yields down and prices of the corporate debt up. So yields work inversely to prices on the bond market. So as people were buying into the corporate debt, the yields came down. That got it ever closer to the U.S. Treasuries. So that was one of the ways that they were able to lower the yields on corporate debt and get it closer to the U.S. Treasuries, was simply by putting out the statement that they were going to be buying corporate debt using that special purpose vehicle, and the market participants were able to then funnel money into the corporations, and then bringing that yield down closer to the treasuries. Now we have somewhat similar situation taking place again, because again, the market participants are anticipating lower interest rates coming into the future. What they are doing is locking in rates now. So if you buy into the corporate debt before the yields come down, then you will lock in higher yields, right? So now the demand for corporate debt starts to increase, right? Prices move up and yields come down. And this is what they're now finding is taking place, is the more that the news comes out that the Fed is going to be lowering interest rates or reversing course, the market participants are like, oh crap, yields are going to come down. We got to lock in our higher yields while we still can. So they start funneling money into the corporate debt, trying to lock into those higher yields, which then, of course, starts bringing the yields down ever closer to the treasuries. And so this is another way that it can funnel money in there, is literally by doing nothing at all but making the statement that they're going to do it. Right? That's it, by lowering rates. That's all they have to say. It's like, yeah, we're doing this. And then all of a sudden they're like, oh crap, and then it starts to happen. And part of this lowering, like the part of the credible threat is to actually do it. Like if all of a sudden it comes time and they were supposed to do it and they're like, oh, we're kidding, like it wouldn't work, right? So they are probably going to do some symbolic lowering of interest rates if they want the markets to continue to believe that that's what they are going to do. If they want them to believe opposite, it's just like, hey, inflation is running hot, we need to keep interest rates elevated and all this other stuff for whatever reason. That is the forward guidance that they're putting out there for the market to then say, hey, we need higher interest rates. All right. See, right now they're saying, like, to the market, it was just like, if they want to try and stimulate the market with lower interest rates, you put up the credible threat that you're going to do it. That will lower interest rates all on its own. Mortgage rates will come down, the 10-year treasury will come down, everything will follow that. It'll just go in that direction. If they need interest rates to be elevated for the monetary policy, then they just put out that credible threat. This is not the adjustment of monetary policy like it used to be. See, if it was the adjustment of monetary policy, or if it was the adjustment of in interest rates, which was the true monetary policy, that would be like the way they conducted themselves back in the 90s, right? But they don't do that anymore. Like, they've learned that they don't need to adjust interest rates anymore. They need to adjust the people's perception of where interest rates are going to go. That is what is important, right? And this is really, like, honestly, how the Federal Reserve is going to conduct themselves going into the future until they are absolutely required to move those interest rates. And part of that would be to make sure that the credible threat is established. But other than that, it's going to be more about their words than anything. Like, think about it. Think about what happened after, like, we were just doing a video about this. What happened to the housing market in December, according to the National Association of, what was it, home builders, or National Home, whatever it was, I can't think of it right now. But talking about how home prices have gone up and the demand for mortgages have gone up, right? And it was all based in December and January, actions that were happening back then that now have, like, the impact hitting us, right? So back in December, at the end of the year, when everybody knew there was going to be a half a dozen rate cuts or some crap coming into the future, people started moving into the position as if those rate cuts had already started to take place. And this is like literally what started to impact the housing market, was that credible threat. They didn't do anything. The Federal Reserve has sat on their hands for months now doing nothing different. But yet all this changes to the economy happen on a regular basis based on the perception of what it is that the people feel is coming in the future. Like, all this housing market information came out that had no difference with Federal Reserve actions incorporated into it, but all kinds of people's perception changes. Am I saying that right? Do you guys? All right. Thank you very much, Lumberjack Landlord, the National Association of Realtors. That was it. Right, National Association of Realtors. Thank you, Simon. Well, thank you, Lumberjack Landlord, for the $5 and correcting me on that, because I couldn't think of it. I really appreciate you, man. All right. Homes will fall, priced in gold, no doubt about that. Priced in dollars, hard to say how much. Okay. Oh, geez. These comments are coming so fast I can't keep it still. Okay. The real currency is the time you work. Real currency is time. I agree with that. Everybody has a limited amount of time on this planet. That's it. And that is by far the wealth, right? Is your time. Like, what it is that you are doing with your time, what it is that how much time you have to do the things that you really want to do with your life. Like, spending your entire time chasing money, chasing work, chasing, like, things that are not going to necessarily be the greatest things in your life, right, can really deteriorate you. You have to enjoy the fruits of your labor. Like, you have to, like, there's times in which that you have to buckle down and you don't chase any kind of pleasurable experiences. You only chase excellence until you have acquired the position in which that the pleasurable experiences just naturally come to you, right? That's literally, like, the secret to it all. It's like, it's not even really that hard. I mean, especially if you start early in life, you don't even really have to, like, put in that much effort to acquire the things that you need in life. Once you get older, if you screwed it up, if you chase pleasure your entire life and never chase any excellence, then you have got a lot of making up to do, but It's really not that hard, And time is the key to it all. All right. Hope that answers your question, guys. I'm going to buy Simon's Toyota. Incorrect. That's not what's happening. Show up for my live stream and I will show you. Yeah, I mean, you got to understand, like, when it comes to, like, if somebody was going to tell me how to invest, right? Invest into real estate or invest into stocks or something like that, then I would want to see how well they have done at it. When you find people who are professionals at what they have done, like they are good at their game, they understand it well, then you listen, you don't argue, right? You just take in the information. There might be things that you disagree with. It doesn't really matter if you disagree or agree with it. What you do is you sit there and you listen and you take it all in, right? That's that's how you get the information that you need. Following guys like Lumberjack Landlord who are successful at what they do is the only way that you're ever really going to truly get this information in. Like when I study monetary policy, I'm not studying it so that I can understand how to invest. Other people might be doing that. I'm doing it so that I can best understand what it is that I need to do with my life in order to deal with the fact that there is going to be an ever-changing monetary policy impacting my life, right? I don't necessarily want to be a landlord of 150 homes, right? It might be nice to have a few rental incomes. It might be nice to have enough rental incomes to pay for my daily life, right? Might be a pretty pleasurable thing to have, but you're going to have to chase some serious excellence to get there, right? I mean, everybody is going to be different. I know that some people like they dream of having like yachts and mansions and traveling the world and having private jets and all that other stuff. I mean, to me that would be cool. Like, I mean, I think that would be really cool, but it's not something that I really like desire in my life. Like what I desire in my life is kind of like what I got going on. I want to be able to pay my bills and not stress about it. I want to be able to fly to conferences and hang out with friends. I want to be able to, take my family on vacations that aren't extravagant, but just pleasurable, just fun, right? That's pretty simple. Like, I don't have like this desire to like be some kind of crazy famous economist who makes all kinds of crazy money selling massive amounts of books and stuff like that. I don't like that's not I mean, I think it would be neat. I'm going to try and do stuff like that, but it's not like this goal of mine to have this overwhelming amount of wealth or something that, it is like to me, that's not there. I want stuff that's simple. I want a view. I want music. I want ribeyes. Right? That's it. Yeah. And so being able to acquire those things in my life, I think are going to be pretty easy. Like, I don't think that's going to be difficult for me. And following the monetary policy like I do has seems to position me in that sort of way. Like, I, do this YouTube thing. I have some other, side hustles that I kind of work on and stuff. And I just kind of, do my life. And I don't stress about a lot of stuff, not like I used to. Yeah. And I think that's probably more, more liberating, more feeling of freedom than I think I would ever have if I was trying to conduct myself with massive amounts of business, right? I mean, I know like you can contract out a lot of your, obligations to other people, especially with like property managements and stuff like that. But ultimately, to be able to have the freedom to do whatever it is that you want to do with your day and like literally take the day off and not have to worry about it. Like I know people who they're so enthralled in their business and conducting business and doing business, like they cannot literally take a day off. They cannot say, you know what, I'm screw this day. I'm going to go to the beach and just chill and not look at anything that's business related. Like I know people who cannot do that, not even for one day. If they did, it would start screwing things up, right? I'm in a position I could take the day off. I could take my weekend. I could take 5 days off, if I wanted to, and it wouldn't change my life that much. Like literally at all, And I think that's a pretty unique position to be in. And that's like, that to me is true freedom, or closer to true freedom. All right, moving on. All right. I think the dollar will fail in the far future. Yeah, eventually it will. I mean, at some point, I mean, it will, but like how far out that is and what that looks like, and, what changes to or to monetary conditions, like with cryptocurrencies, excuse me, who knows what the future is going to have. But I mean, eventually, like all fiat currencies eventually fail. All right. Mickey, I know some of the other markets, but dialed in for the is in my market. I couldn't give back much when I was poor. Now I am retired from my W-2 spend days. I spend days with my kids, work how to give back. Yeah, see, right? And teach others. See, this is like, this is why I do it too, right? Like I could study all this monetary policy stuff and like keep it to myself, right? I mean, I could find other things to do with my day. I could do business. I could actually, I mean, I've thought of some pretty good businesses that I could start here in Astoria that I think would be quite successful, but I don't know if I necessarily want to put that much time into it. I would be taken away from my kids. I would be taken away from, the other things that I have going on. I think this is my passion. This is what I'm meant to do, is to talk about monetary policy, talk about economics, talk about these theories, talk about it from a working class point of view, to try and spread this information around. I think this is like what I was intended I was put on this planet to do, and it feels good to me and I enjoy doing it, and I can't imagine myself doing anything else but this. And so, like, again, like I don't even think about the monetary rewards from it. And it's like it's crazy. Like I don't try to chase the money when I do this YouTube channel. I mean, it was crazy to have, like, Matthew and Mike and Dion and, all nighter, and we were sitting all around there, and they were like, dude, you should be monetizing more of your channel. Do the affiliate sale, do a, Amazon affiliate. And I was just like, yeah. Um, that's something I should do. Like, why am I not doing that? It's like so easy. And so I did it. And like, it's already starting to generate some money, right? And like, these are things that I don't necessarily think about because I'm not really chasing the money. Yeah, I mean, I want the money, don't get me wrong. I did some sponsorships that paid a stupid amount of money that I was just absolutely floored over. I mean, like, man, I can't earn this much money working 3 months, it was just like, holy crap. And then it made me feel like hell. Like I didn't enjoy it. It was just like, why is it that I can make all this money doing the sponsorship, but I don't like the feeling I get from it? It was just like it doesn't feel like I was following my true beliefs or passions or desire for this channel. It felt very out of place, so to speak, right? And so I don't do that. I'm gonna pursue other things like the super chat I just got from Matthew. Thank you very much, man. Dead on, Simon. More people like us get the more we give back. Always give back no matter what, but more you have, the more you can give. And I agree with that, man. I mean, that was, see, it's easy for me to understand that because it wasn't that long ago I had nothing. Like I could not do anything for anybody. Like, I mean, I might be able to go and swing a hammer and like repair your roof shingles or something of that nature, but there was nothing I could do. Like there was very little that I had that I could give back to society with, because I was in such a bad shape, drunken loser, debt, no money, like, okay, we're back. All the bad stuff, like all the like I was a nice guy, I mean, I wasn't an asshole to anybody, I was cool and friendly, and everybody like, liked hanging out with me and stuff like that. But I didn't have anything like I could really do. And now I feel like I can do stuff, even monetary, like, helping my buddy Frank out with this channel and being able to match contributions and stuff like that. That's something like I never thought that I would ever have, like something like that capable in my life. It would be like, the only thing I could offer to do would be maybe like, hey man, I can watch your kid or something like that. That might be the most that I would be able to, offer. Now I feel like I can offer so much more and then bring in the network of people that I, have built here on this channel to also help contribute in that way. Man, that's like, wow, like, holy crap, that's actually existing. Like that to me is incredible. And yeah, it's just like, I don't know, like, what else I would do, if I didn't have this anymore. I would feel like lost, really. And thank you, Matthew, because it's all about, like, obviously you got to take some, right? But it's a matter of, like, I think it's what they refer to it as 51%, right? You give 51%, you take 49, right? But you got to give more than what you're taking. And that's really what I feel with this channel. The more I give, like, the more I give out, the more I try to break down this policy, the more I try to answer the questions, the more I try to understand it for myself and to relate it to my day job and how other people can relate it to their day job. That's like, I don't know what else I would do if I wasn't doing that. Uh, okay, let's see here. The more I have, the more I get to keep. A rad dude coming in hot. Okay. I started a music theory channel and it's slowly gaining some interest. No money yet, but maybe in a year. Well, stay to it. Stay curious. Stay to it too. Because this is the thing. If you really have a passion for something like that, like you really enjoy music theory, all the concepts that go with it, and you are learning, you share what you learn on YouTube and what you have learned. Not necessarily, like, to me, when I'm out here, people say, like, man, you're a really good educator. I'm not educating. I'm showing you what I've learned. Like, I'm not trying to teach. I'm trying to show you what I learned as well. And in the process of it, people are like, dude, you're teaching me, right? And it's like, I'm not trying to be the teacher. I'm just trying to show you what it is that I've learned and I've come across. Now, I guarantee you take anything. I don't care if it's mechanics, music, fishing, playing poker. I mean, I don't know what it is. Like, I mean, it's whatever it is. If you have a passion for it and you put out a video every single day for a year, I guarantee you it'll change you. You do a YouTube channel and you put out a video every day for a year. It doesn't have to be every single day, but you try to do a video every day for a year that's following that particular passion. I swear to God, it'll change your life. Especially if you're not doing it for any other intent, to just show what you have learned, to try and provide some sort of value to your channel, to your videos, that say, hey man, this is what I've learned. These are the theories that I found. This is the stuff that I find exciting, and somebody else is probably going to relate to that too. And this is the funny part about it. I don't care how many people out there are doing the videos that you think are just saturated, right? I don't like, you're like, yeah, but everybody out there has a video that's, or doing videos like I want to do. I don't care. There is people out there who don't want to hear that information from them. They want to hear it from you. Literally, they relate to you. They want the information from you, not from that other guy over there who you think is cool and you think, you relate to him. There's other people out there who don't, right? And that's important to understand, is that no matter how saturated you think the information is out there, I mean, think about it. I'm an uneducated economist, right? I didn't study. I didn't do anything to get a degree. I don't work in finance. I don't do stock trading. I'm not a lumberjack landlord. I'm not like, I'm not any of that stuff, right? I'm just some dude who's pouring through Fed documents and, past economic theories, working class guy just like everybody else. Like, I am no different than anybody other than my obsession over economics and monetary policy and economic theory and stuff like that. That's the only difference between me and anybody else out there. And Dylan, stating now may very well help you get the property. Starting now? Stating now? Is it live now? Yeah, we're live right now, man. Yeah, I just don't want to split my attention anymore. got a lot of people to cold call, a lot to learn, and relationships to make. Hey, Dylan, I'm just curious. You don't have to tell me, man, but how old are you? I mean, you seem to me to be pretty young, but you're really into this. All right, Mickey, where do you see the world in 10 years? Cutting through the crap, jargon, and corporate babbling. Yes, starting phone has been slow. Got to restart it. The wealth gap is closing at a rapid rate. He is 18. 18. Yes, dude. Man, I'm proud of you, dude. You keep doing this, man, and you're going to be fine. You know, you keep internalizing this. At 18 years old, you got so much time on your hands, man. You are so fortunate to be like, I wish at 18 years old I had half a clue, half even a 10% of an idea of any of this stuff. I had nothing, none of it. The only thing I cared about at 18 was girls, beer, weed. That's it. That's the only thing I cared about was girls, beer, and weed. And in that's, I mean, I think back and it was just like, man, I had so many opportunities because like I was pretty committed to my job. And I did a really like I showed up every single day, whether I was sick or drunk or whatever. It didn't matter. I showed up every single day for work, no matter what. And it actually did pretty well for me because it put me in like I was foreman of like positions at a young age. Like I was in charge of running crews and stuff like that. I was very responsible with my job. Like I worked hard at my job and I pursued excellence at my job, but then I took everything that I earned from it and I just blow it, just piss it all away, right? And like so I worked 8 hours really hard to just do nothing but pleasure seeking things afterwards, and it was just the worst thing that I could ever have done because I did it for too many years. I did it for 22 years essentially, right? And screwed off 22 years of chasing excellence that I could have like, you know, or the possibility of chasing excellence, and just pissed it all away, every bit of it. So at 18 years old, man, if there was any advice that I could ever give, man, is don't do that, right? Like you got 18, think about it, at 28 years old, in 10 years, if you buckle down, you focused, you start businesses, you pursue excellence, in 10 years, I am sure of it. Like I am sure you could have $1 million sitting in the bank with houses, with investments, with a free life, I mean, like literally like a freedom to life that, you know, you could only just, that most people would just dream of, right? You stick to it, and I believe that you can do that, and I think you can do it in 10 years, and you can spend the rest of your life, because it's all about time, man. Like it's all about the time you have. I'm 47 years old. Look at what I have to do in order to try, and like I'm going to be making house payments for the next 30 years. Right? If I was to stay here, if I don't move out of this house and rent it out here after the kids move, which I plan on doing, right? You know, make it into cash flow property at some point. But right now I got to raise these kids. It's so hard to do this. I mean, to try and come up with a house payment, to try and provide the things that, you know, get Freddie's into sports, to do the, you know, stuff to have a family, right? And then also try and have a retirement, because I never saved for a retirement either, right? So I got all that to try and work on, you know, and it's like, you know, I pull my hair out trying to figure out like what it is that I'm going to do into the future. That's why I'm so adamant about being out here and doing these things, is because this is what I feel following my passion is going to do, is lead me into a better life. But I wish I was 18 years old. Man, if I was 18 years old, I would find a compounding interest investment that I could start dumping money into, and I would blindly do it. Like take something that you're not going to miss, $50 a month, right? Take $50 a month and just choose that investment. Try to do a little bit of research, get a Roth IRA and put $50 into it, $100 a month into it from now on, dude. And I guarantee you, dude, you're going to be happy with that decision. Do all the other things you want, man. Like, you know, chase the Bitcoin, chase the gold, chase business, chase whatever. Just do that one thing, man. Contribute to that one, compounding interest investment that you feel somewhat secure about. It doesn't even have to be that much. Like, even 8 to 10, 12%, like if you can get up to 12 or 10, but even 8% is going to be a significant number at the end of the day, right? And just keep rolling that over for the rest of your life until you're 65 years old. You're going to come out the other end smelling so sweet, dude. You're going to be like, it's going to be like the best. I wish I would have done something like that. Like if I go back in time, that's what I would have done. Uh, at 18, open an FTX company, buy the government, put me in jail for competing against them. I am 18, open an FTX. I see. What do you think about neurotex? I don't know about that one. Yeah, I'm with you, Brody. I don't know what that is. Uh, Start investing, save money, work 2 jobs, but after all this, I went to college, and after I gotten a job in robotic engineering and continued investing, etc. Elon's chips. Oh yeah, Brody and I. Oh, all right. Hold on here, guys. I gotta put up a sunblock, or else my camera's gonna cook. Okay. Guys, how am I going to do this? I'm going to end up cooking my phone if I don't put up some sort of sun shield. Dang it. Bummer. Nope, I can't do it. Sorry, guys. Give me just a second here. My phone's going to cook and it'll die on me if I don't put up some sort of... Here, that might work. All right, let's see if that does it for a minute. All right. At 18, yes. At 18, stay sober. Dude, that was my major issue, is that I wanted to get high, right? And I wanted to get high every single day, and it was probably because of some issues that I had growing up or whatever. It's just like, I tried to block it all away. That was probably one of my major issues is running away from it all. And so, like, I could really work hard at my job, but then after my job was done, if I didn't have something to focus in on, then I was going to start using, right? And mostly it was alcohol. Alcohol was my biggest issue, because it was so accessible. And then, I had a family full of them too, so it didn't help any. But that, if you could just stay away from that, stay away from, like, even chasing girls. Like, I mean, you have connections, have friends and stuff like that, but I wouldn't even get into any kind of committed relationship with anybody. Like, unless it's a business partner or something like that, I don't see any reason to get any kind of committed relationship whatsoever. Focus in on you, your path, your goals, your ambitions, your, excellence, and don't like commit to, like, I mean, I'm not trying to tell you what to do, man, but unless you have somebody who is really, truly on board with the things that you are moving towards. Like, I mean, and truly on board, not just somebody says, oh yeah, I like you, so I'm willing to do it with you. No, like somebody who is honestly, truly there, because that is such a rare thing. And it's like, I know I have one, but it wasn't always that great at times, right? My wife and I have been together since we were 18 years old. We have seen some crap together. We face some really difficult situations. We've gone through a lot of different things together. And there was times that we should not have been together, right? There was times in which I can honestly say that we should not have continued on with the relationship. Why we stuck it out, I don't know how we did, but we did. And as time went on, healing and everything else that's happened, it's 30 years, right? Like, most people can't say that. Most people can't say they've been in a marriage for 30 years. I can, right? And I can see where a lot of people in my life committed to things that didn't work out, right? And it really they focused in on themselves and the pursuit of their life, and making themselves that genuine that genuine man, right? That one that is like knows what he's doing, has like goals in mind. Nobody deviates. Nobody's going to get him to deviate from that, right? That is going to make you the man of excellence that you really want, right? And I don't know how else to explain it, because I didn't necessarily pursue that myself, but I look back on my life and I'm thinking, man, that's what it would have done. That's what it would have taken, to get there. You have an amazing opportunity, dude. All right, let's go look at that. Lumberjack, oops. Let's read this one that Lumberjack has. Thank you so much for the $10, man. You're really throwing it at me today. I appreciate you. Dave Ramsey is okay, but he doesn't make millionaires till retirement. Follow other wealthy people and work with them. Look who your 5 closest friends are. Dylan, keep doing what you are doing. Yes, absolutely. And that's why I'm saying, like, if you start early, like $50 a month isn't that much money. And if you just do that and just blindly do it, it gives you the opportunity to do all kinds of other stuff. Like, go pursue the business, go pursue like the acquiring of rental properties, go pursue the knowledge, whatever it is that you need to go out there and pursue as far as your passion goes and what it is that you feel in your life, and that's so true about the 5 closest friends. I had to do, I'm not saying like I had to say goodbye to my friends, but for the most part, when I gave up drinking, I had to say goodbye. I was just like, I can't do this anymore. I can't hang out at the bars. I can't, sit around just even drinking beers around the campfire anymore. I can't do that. I have to focus in on what it is that I got going on here, because I did that too much. Like, it would have been fine had I just done it occasionally. Then I would still be able to have that in my life today, but I can't, because I didn't do it occasionally. I did it every single day. I screwed that up, right? I can't have that in my life anymore. And so the people who do that, that's the mindset that they're in. And I can't be in that anymore. Like, I have to be around people, and it's not even, it doesn't even necessarily have to be people who are in the same things that I'm doing. They just have to be in the pursuit of excellence themselves. They're chasing their business. They're chasing their, pursuing their things. They're not pleasure-seeking people on a regular basis. They're people who are chasing excellence. And again, we don't even need to be partnered up together. We just have to be in that same mindset together, because that's what's going to be the energy in which that's going to elevate you. It's very important. Those, like, I think about sometimes when things get kind of aggravating at work, because I work with a few other people who aren't necessarily, in the process of chasing excellence, and a lot of times I find myself like, feeling like, feeling that energy coming from them. And I'm thinking, man, I almost have to exit myself out of this. Like, I can't be around this negativity, or at least the feeling of it. To me, like, I want to be in the energy of pursuing more and excellence and, trying, like, that's an important part, just trying, Back down to the bottom. Poor Simon. The Fed cuts off his internet access. Yeah. Top 5 people I'm around the most. Cody, Christian, Matt, Simon, then Bernanke. Right on, Dylan. Well, keep sticking it out with us, man. Alcohol is a beast to quit. It is, bro. I bet Julio, it really is hard. And that's the other problem with it is that once you start and you get into it, then you will convince yourself for whatever reason that you need to drink that day. Like, every single day when I woke up, I had quit drinking. That day, I'm like, that's it, I'm done. I'm hungover, I'm sick, I can't get to work on time, blah, 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 whatever. Right? I made up all these excuses and I said, man, I'm not going to drink today. By 4 o'clock, I was just like, can't wait to get that beer. Ugh, can't wait to get the beer. Every single day I did that. Every single day I quit, and every single day at the end of the day I'd be drinking again. Must be nice at the coast today. Cloudy here. Well, it was sunny earlier, but I see that we're getting overcast skies right now. So, and it was dumping hard earlier. Uh, all right. The collapse of the West will be chaos. When you quit going to the bar, you realize they were all fair weather friends anyway. Yeah, pooping while standing. I love the name. I love that handle. I agree with that, but really, I would have to say that almost everything that I got in my life when I was drinking, I found at the bar. Like, if I was unemployed, I would go to the bar and hang out and tell people that, man, I'm looking for work or whatever. And then the networking that would start taking place would find me work pretty regularly. And I found that to be the case with most of the things in my life that were happening at the bar. But the only problem is that it involved alcohol because that's the environment that you're in. So no matter what, I couldn't escape it, even though I was able to, like, acquire, like, say, employment, go and find a job, a construction job to work at by hanging out at the bar. Ultimately, I would do that job, chase excellence, and then go and piss it away, because that was the environment I was in. All right. Catch you all later. Have a nice day. All righty, Chad. We'll see you. All right. Well, guys, it is getting on to about 2.5 hours into this video, and I think I've probably extended my battery up. It's at 15% now, so. All right. How did you stop drinking? Stopped being around people who drinks. All right, Debbie, that's a great question. So what happened to me is that I got to a point in my life where I knew I was going to fail. Like, I mean, I had, like, my vehicle was pretty much done. Like, I didn't have a vehicle to drive. My income was the bare minimum. Like, I mean, I was barely earning any money. We had just had another kid, right? So, um, little Freddie was born. Um, my dad was really upset with my behavior, and I was living in his house, right? And he was, like, basically threatening to, send me on my way to get me out of the house. And it was totally like it wasn't. I mean, it was totally reasonable too from the way that I was conducting myself at the time. I did not blame my father for any of that, at the time. I mean, I look back and I was a little upset about it, and actually I was very upset about it. But it was still, I look back on it and it was just like, no, that was totally appropriate for him to be doing that, and it was very due to my inappropriate behaviors, and that's all. I'm going to leave it at that. And ultimately, I was just sitting in this position in which that I was done. Like, next month, I don't know what I'm going to do. Like, all the bill collectors, I'm going, I foreclosed house and no car, and, like, it's just like everything bad. Like, all the stuff. So, like, I'm literally like a month away from, like, nothing. Yeah. And my wife ends up going off to rehab. Somebody who was close to us just decided that, that's it, enough's enough. And, like, basically found a place that would take her that weekend and sent her off to rehab. And so she went and did 30 days in house. And at that time, I'm like, I thought it was over. I was just like, my whole life is over now. Like, it's just like, this ain't gonna work. She's gonna come out of rehab and she's just gonna go right back to drinking, like, because everybody does. Like, literally, rehab doesn't work for anybody except for, like, maybe like 10% of the people or something like that. So she had like a 1 out of 10 chance of this actually succeeding. And I didn't think it was, because, like, she tried quitting so many times, and so did I in the past, and just didn't work. So I was what I would feel like I was at rock bottom. Like, that's it. I'm like, I'm gonna be out on the street, and I don't know what I'm gonna do with these kids, and I don't know what I'm gonna do at all. And my wife's gone off to rehab and whatever. So that was it. Out of pure stubbornness and being pissed off, I quit. Like, I just wouldn't drink. And that was a major problem. Like just quitting like that and being so like cold turkey and like kind of power mad about it is that I grew really, really resentful. Like I got very resentful of everybody and everything, and I was very upset, not realizing that it wasn't anything but my own condition, like my own path that led me to where I was at. I was blaming everybody under the sun for all my problems, and I realized that the reason why I was doing that is because I probably had always been doing that, and I was covering it up with alcohol, right? So if I started to feel kind of off or whatever, I would just cover it up with booze, right? And I would just get drunk, and then all my problems would go away. So once you quit drinking, now all your problems are there, and you realize, crap, man, my life is really screwed up now. And I can't just forget about it with alcohol. I got to actually deal with this. So then being like sober and coming to that realization, it was like I it was hard. Like I was like very angry and upset and like to the point this is kind of like one of the conditions. I'm sitting there at work. I'm working the till and a guy comes up and he's going to buy some lumber off of us, right? And I can smell alcohol in his breath. And I start getting angry about this. I'm like, what the hell are you doing here, man? Like, what are you doing conducting business with me right now with alcohol in your system? Like, this is the way I was feeling about it, not giving it this horrible meaning. Instead of being like, homeboy probably had a beer with lunch and it's not a big deal, man. Don't stress it. It's not even any. Guy was acting totally normal. It wasn't anything wrong with him. He didn't slur his words. He wasn't being weird. He wasn't anything like that. The only thing is that I could smell it on him, right? And that made me angry, right? That was a problem. That was like a major problem that I had to deal with. And so when I realized after I quit drinking is that I had a whole bunch of other issues to try and deal with that I've been covering up with alcohol. And that was the harder part, right? Was trying to deal with that part of it. It wasn't necessarily like I would get kind of antsy towards the end of the day, wanting to get that buzz, get that kind of fun feeling, that tickly feeling, numb feeling, whatever it is that you wanted from it. But that part was pretty easy to deal with for me. Like I could just sit in it, and just say, okay, this is what it feels like to have this desire to get stoned or whatever, but not do it, And I mean, that part wasn't the big deal. It was the other part. It was like dealing with the angry and anxiety and all this other stuff. That was so difficult. And that, to me, like if somebody could deal with that, then the actual drinking part of it probably wouldn't be that hard to give up, It's like the reasonings that you're drinking. That's the hard part to understand and come to the realization of. All right. What would happen if everybody actually realized that the Federal Reserve is neither of those? Too many people living with wool pulled over their eyes and accepting their slave status. I kind of agree with that. Can't be the gatekeeper at multifamily strategy. Dealing with your applied knowledge, I love it. Alcohol Anonymous. Yeah, I would definitely say that if you're gonna go and quit drinking, that you should definitely, go to the rooms and share with the stories and stuff like that. Really helps a lot. I know it, with Sarah, it helped tremendously. In fact, I'm sure because she was so involved with it that I was getting a lot of residual from that, so that helped me, on my path to being sober. First step is to quit drinking, then you will naturally grow out of this whole mess. You will. And I assure you, like, the hardest part is to literally just sit there with with the addiction, with the addiction, right? To know, like, yes, I feel it. I know what this is. I understand the feeling that I'm having right now is one of desire to go out there and get loaded, right? I mean, it's like, just be aware of it. Yes, it's here. And I'm going to, sit with it and, and feel it and then go to bed. And then tomorrow I'm probably going to feel it again. right? But eventually the feeling just doesn't really bother you that much, and it eventually just goes away. Not goes away. It becomes less. It never goes away. This is the thing. It never goes away. Like even 4 o'clock, 4:30 right now, it triggers. Like, I'm thinking, man, it's beer 30, right? And it's been a long time. I mean, we're going on almost a decade since I've drank. And I still get, somewhat triggered when it comes time to the end of the day. You know, same thing happens. Like addiction will do that. It will be forever. It's a forever thing. Like once you have become addicted to something, it's not like you're not addicted anymore, right? You're always addicted. In fact, your addiction is still going while you're sober. So the moment that you give up your sobriety and you go back to whatever it is that you had done, you will instantly go right back to as bad as you were before. In fact, you will become worse because your addiction is still doing, it's still going, it's still operating, right? Like, what do they say in AA? I think they say, like, while you're sober, your addiction is doing push ups, right? And so when you go back to drinking, you're going to hit it harder than you had ever been on it before, right? You don't go back. Like, some people can, like, I guess, have some discipline and, like, be cool about it, but most people don't. Most people who are addicts in their past will go right back to where they were and then be worse at it. AA works for sure. Yes, it does. I totally agree. Like I didn't do it myself, right? I didn't go to the rooms, but like I said, my wife did, and she was very involved. And like I said, I think I got a lot of residual from her. So, all right. Have you owned Exxon long enough to get dividend payments? The continuing drone strikes are probably going to good people who own oil stocks. Yeah, actually, well, I don't own that much Exxon right now, but I did get some dividend payments off of it, and the stock price has gone up since I've done it. But yeah, I'll probably start dollar cost averaging more into that now that I got my taxes done. Taxes in Oregon were awesome this year. We got a kicker check. What's fun about Oregon is that somewhere in the Constitution they say that if they have overtaxed, like they ran, under budget or whatever, they have extra money, whatever that means, they can't keep it. They got to send it back to you. So this year, like everybody in Oregon had a kicker check that came back that was, if you had filed in Oregon, that was pretty good for a lot of people. I know for Sarah and I, it was the full amount, whatever they allowed, which was pretty significant. And anyway, that was nice. So anyway, all right. I hope you are doing better. Meditations by Marcus Aurelius is a great book. Hey, right on, Dylan. Thanks for the suggestion. The Creature from Jekyll Island. Yeah, that's a good one too. All right. Guys, I think I'm going to call it quit here. My phone's getting to the point that it's going to die here soon, and we're 2.5 hours into it. And I would imagine that the family probably wants to hang out and go do something. So I'm going to go, I don't know, find out what they want to go do. All right. I know it's been less than 24 hours, but any news on Frank? No, I haven't actually been in contact with the family or anything. I was just kind of more in contact with some of the people who are organizing some of the donations and stuff like that for him. And haven't even really been in that close of contact with them either. Just knowing the story and being, we're a pretty small community here. So like I said, Frank is somebody who's grown up in this community. Everybody knows who he is. Um, he was a few grades ahead of me in school. So I haven't heard any word back on it, but I will give you guys an update once I do have something. People are just told drinking is fun, then the people just want to have fun. Well, yeah, and I can tell you now, man, like drinking is fun. Like I can't deny that. Drinking is fun. Drinking is fun with girls, right? That's like girls drinking weed, man. I can't think of anything. That's it, man. Like I'm in it. Like that's like, go to the beach, go to the lake, go to the wherever, man. I'm there, right? That's all awesome, right? I mean, like it's the funnest thing in the world. but it's also going to lead you down a path of failure. Like it will, like, unless you can offset all that pleasurable experience with the doubling of excellence that you do in life, then it's going to be very difficult to try and, acquire the things that you really want in your life. Like I said, I mean, if at 18, 10 years, 10 years of hardcore dedication focused in on, becoming a strong, independent, like strong in both mentally and physically, like hit the weights, hit the gym, all right? Grow physically strong. Take even like, even if you're not into it, I would take some sort of like jujitsu class or boxing class or something like that. Like learn to be, like, to have combat in your mind, right? And and do that hardcore for 10 years, 10 years straight, dude. And I guarantee you, man, your 30s are going to be so rad. You're going to have the best life at 30s. You would just, you'd be killing it. Beer is fun till you want to stop and you can't. Yeah, that's so true, Larry. All right. All I need is a cool buzz, some tasty waves, and I'll be fine. Where'd you get that jacket? I love that. Good old Spicoli, man. All right. Oklahoma says, have a great weekend. Well, thank you, Aaron. I hope you guys have a great weekend. Thanks for sharing your story. 10 months sober here, and it's changed my life. Well, thank you very much. And on that note, my phone is about ready to die. My screen went black. I appreciate everybody who had joined the live stream today. Thank you so much for all those super chats. Thank you very much for liking the video. Thank you everybody who has contributed to the Uneducated Economist and supporting the efforts here. I really can't thank you guys enough for everything you do for me. All right, Uneducated Economist, you guys let me know.